start. Now, in this marathon class of audit, we will try to cover as much as we can. And in the meantime, first let's take a look at what is the weightage given by ICAI. And this is the weightage suggested by ICAI through their official site itself. So the percentages are going to be 5% variance, but more or less they will stick to it. So if you look at this list of it, whatever I've marked as this, with first priority, those are the ones you should be covering in your priority first. But if you ask me from ease perspective of it, the easiest things to start with are the first one, because there is nothing much that they can ask you and nothing can go wrong because the boundaries are limited. Whereas in the chapters like audit report, they can get into little technical side, they can get into depth, so which you may find it little difficult. So the order that you can follow for your preparation would be chapter, from the ease perspective of it, this you can prioritize, this is the first one, and then you can mark it chapter 7 as the second, and then you can go to chapter 2, so in the order of it, and this is from the ease perspective. And then this chapter 6, which is talks about documentation, then come to chapter 11, and then chapter 10, which is far easier, and then go to chapter 3. So if you prioritize first 7 chapters in this mode, it's going to be easy for you. So in the sense, it may look like the first one, though it is like 12 marks to 20 marks, there is nothing. So if you're good with the schedule 3 amendments, and if you know the knack of presentation, that is actually a easy one. You can neglect it. So if you ignore that, out of the remaining 80 marks, if you read even these 6 chapters, they are not too much in depth, but they carries significant weightage of it. So therefore, our class 1, that is the day 1 of ours, we will try to cover these chapters as much as we can. And then tomorrow we will focus on the remaining ones. The remaining ones are a little lengthy, and but still they are also to be covered. We will cover them. But as I said, from the ease in completion point of it, so let us target in this mode. So to begin with chapter 1, which is about nature, objective and scope of audit. Very limited chapter. Earlier at least the chapter 1 was a bit lengthy, but now they've condensed it. Now it is having whatever was there in the chapter 1 of earlier content. Now they've broken and divided into 2 pieces. One is chapter 1 and second one is chapter 11 with a little bit of additional contents in it. So let's start with this nature, objective and scope of audit. And this is easy and very easy to read and remember, and very easy to score as well. And I'm suggesting this only for one reason. There is the possibility of tough questions to come out of this, or the weak questions to come out of this, is very, very minimal. So these are the safe chapters. But if you go and bang on this audit report and all that, they are okay to read, but you will not be able to guess the quality of questions. So suddenly there can be a question which is very tough and you find it difficult to answer. So even after preparation, you're not sure of your marks. Whereas these chapters that we have listed here, they are going to be your friendly chapters. So the boundaries are limited and it is easy to score. So as a smart student, I repeat, these are the whatever we have numbered here, that is the chapter 1, chapter 11, chapter 2, chapter 7, and then chapter 3, chapter 6, and chapter 10. If you are able to cover around these chapters, it is good enough to pass. So, and without much of a difficulty. So, whereas the remaining topics, that also we will try to cover, but they are very lengthy in nature, and the probability of a tough question or a slightly more than what you can think of it is very high. Whereas these are very student-friendly chapters, very limited chapters. Now, let's begin with this. What is the meaning of audit? So this, strictly speaking, he won't ask you this. But if you learn it properly, maybe whenever there is a lengthy question given, you can use this as an introduction. So what do you mean by audit? Audit is an independent examination of financial information whether it is profit oriented or not, or irrespective of its size, and why is he reviewing this financial information with a view to express opinion. So to summarize, what is the definition of audit? It's nothing but it's an independent examination. And what are they examining? They're examining financial information of an entity, any entity. So irrespective of its size, legal form and all that. And why is this auditor reviewing this financial information? To express opinion on the financial statements. That is why he's doing it. But the most important question that he is asking is, this is the one. You can mark it as a category. That is the matters to check to ensure that the financial statements are not misleading. Very important and very repetitive question of the recent times. Earlier it was not a repetitive. So if you look at the very old questions, the old trend of questions are slightly different. So the advantages of planning and these kind of stuff. But if you look at the modern type, that is post 2020, the way of questioning is totally different. And particularly after your new syllabus, there are new contents which are gaining momentum. So keeping that point in mind, whatever you are seeing here is the most important one, very repeatedly asked in the recent times. So what it says is, as an auditor, my objective is to express opinion on the financial statements. But while doing so, what I have to verify before I sign, what I have to verify to ensure that financial statements are not misleading. So, because before I sign, I want to have confidence so that these financials are correct and they are not misleading. So, what I need to verify, and these points, since it is a repetitive question, you can see multiple questions being asked, like this explains stating clearly how the person conducting this task should take care to ensure that financial statements would not mislead anybody. So, all that the topic is simple. And it's a straight question. Even if you look at September 25 to alert you, it's the same one. CS today, he'll give some story, but if you look at it, what is the being asked? Again, the same thing. You are required to state some of the aspects examined by auditor to ensure that the financial statements which are audited are not misleading. So, and 4 marks, very latest question, September 25. So, therefore, let's begin to this. What is that an auditor had to verify to see that the financials are not misleading? If you convert that text points into a chat form, it will be easy for you to remember. So the same 6 points, some 3 points are related to preparation and 3 points are related to presentation. So with regard to preparation of financial statements, the points that an auditor should ensure are: financial statements are matching with the entries, because you know the sequence of it. First we pass the entries, and what you did it in your +1. You pass the entries, and that entries are posted to ledger. From the ledger you prepare trial balance, and from the trial balance you prepare your financial statement. So since I am signing on the financial, I will go back. Is this financials matching with the trial balance? Is the trial balance in agreement with the ledgers? Are the ledgers in agreement with the entries? So that way, start to end, whether the financials are matching with the entries, and those entries which I am verifying are backed up by supporting documents. So, and then whatever they have entered as entries, that I have verified. But as an auditor, to ensure that the financial information is correct, I also make sure that there are no omissions in entries. So, to sum it up, with regard to preparation, 3 points. Financials are matching with the entries, and proper supporting documents. As a one-liner, you can think of this, supporting documents. And third one is there are no omissions in it. So these are the points from preparation. But from presentation, the information presented is clear and unambiguous, that is, there is no confusion, and the properly classified and disclosed. Whatever the financial, the information given, there is a proper classification, and it is all as per the required accounting standards. And finally, true and fair. And since this is an important question, let us revise. What is the objective of auditor? Objective of auditor we will discuss in detail, but to begin with, it is to express opinion. But while expressing opinion, the auditor must ensure that the financials are not misleading. And how do I ensure? There are 3 angles: preparation and presentation. In the preparation, 3 points. Financials are matching with the entries, and all that entries are supported by documents, and there are no omissions to ensure the completion. And when it comes to presentation, information given is clear and unambiguous, plus the proper classification as per accounting standard, and true and fair. So in all, there are 6 points that an auditor should ensure to see that the financials which is attesting are not misleading. So this is what is this point number 1. And then the another type of question that you get here is, what is the relationship? So this is also a common question. You can see multiple times, like whether is the accounting and auditing are related, and what is the relationship between audit and the law. So various points you see that, and the knowledge of human behavior is required for auditor. So this is right from traditional to the modern question. This you will keep asking. So whatever you ask and whichever the subject, your answer is going to be same. That is there any relationship between audit and the other discipline, that is the other subject? The answer is yes. And how is it related to audit? How is it related to costing? How is it related to FM? Answer is same. They're all interrelated. That is, without the knowledge of accounting, you can't be the auditor. And without the knowledge of law, you can't do the audit. So therefore, whatever may be the question, one and only, it'll come basically for short answer question. It is a short answer question, and roughly around 2 marks this may come. So he will continue to ask, though it is a very simple and stabilized topic, but he will continue to ask for one simple reason, why the ICAI is making you to read so many subjects. So whereas if you look at other disciplines, they go for very deep into it. Like say, if a doctor is an orthopedic, then he will just get into the study of bones and the structure of it. He may not know anything about the brain or heart and all that. So they go little specific. So with the medicine, but as auditors, you study about all these 10-15 subjects. So therefore, the question comes in, why do we need to study? When I want to become an auditor, then why I should study law? I don't want to get into law practice. But that is where he tries to tell you that to become a good auditor, you need to have the knowledge of all subjects. So whatever is the question and whichever is the subjects he is asking, your answer is going to be the same, saying, yes, these two subjects are interrelated, and without the knowledge of one, you can't do the audit of it. That is going to be your standard answer to it. Then there is one small, you can mark it as a B category. Very rarely it will be asked, or mostly it is asked as a tail question. What are the objectives of audit? Now, when it comes to the objectives of audit, there are two standards that talk about it. So one is SA 200 and another one is SA 700. You look at it. And sometimes you will get this question from SA 700 perspective, and sometimes you will get the question from SA 200 perspective. And as per SA 200, what are the objectives of auditor? Two things. One is to obtain reasonable assurance that the financials are free from misstatement, and to report on the financial statements. So to repeat it, to obtain the reasonable assurance that the financials are free from misstatement, that is, there are no misstatements. And the second one is, once you have ensured that the financials are free from misstatement, report them. So report on the financial statement. So these two are the objectives as per SA 200. Same are the objectives as per SA 700 as well, but slightly the language is different. Under this, the objective is to form an opinion, and the second one is to express opinion. So this, as a student, you find it SA 700 as more simple and straightforward than this SA 200. But whenever he is asked, just look at the question, very rarely, not a repetitive question. Whenever you are being asked, just look at it. Is it talking from SA 200 or is it talking from SA 700? But more or less, both may mean the same, but your presentation of answer is going to be different. But the conceptual question what he may ask is, with the change in size and with the change in form, because while defining audit, we said audit is an examination of an independent examination of an entity, whatever it is, irrespective of the size. But then, will the auditor perform the same procedures? Will he do the audit in the same way for a small entity, proprietor concerned to the bigger entities? The answer is no. So that's where, as a clarity to the concept, will there be any change in the audit objectives with the change in the size of the companies? The answer is no. So audit objectives will remain the same, but then what gets changed? The audit procedures will change. So if it is a bigger company, then the way how the auditor does it is going to be different. So as a summary concept, after studying these audit objectives, Will the audit objectives be same for everyone, every entity, small, big, or legal basis and all? The answer is yes. Audit objectives will never change with the change in the size, but what will change is the audit procedures that will change. So a conceptual question which he is asking. Then moving to this next piece of it, scope of audit. So take 3 stars to it and mark it as a category. So in your revision, it is all the more important to identify which topics to read and which topics to leave. And if you are a sensible student, if you are a smart student to catch it, which ought to be read more and all that, then half the battle is won. So in that context, what is scope, what is included in the scope and what is not included in the scope. So that is what is more important. Now, again, to prepare it as a small summary, it's a traditional simple question. All this chapter 1 is of that. Very simple. It looks little dry, but as I said, still I would recommend you to start with this. You are going to get definite questions and the boundaries of it are very, very limited. It is easy to answer. But again, I repeat, if you read some of the tougher ones like standards and even this Caro and all that, no guarantee. Suddenly the question can be something very straightforward which you can handle, or suddenly the question can be complicated and conceptual. So all your hard work may get into drains if you are not able to understand the question properly. But to play safe as a smart student, this chapter 1 is going to be the simple and straightforward. Now, what is the scope? What it includes and what it does not include. Now, what it includes, it cover a coverage of all aspects. So this point, the first one from MCQs, because since you have got 30 marks for MCQs, if you are able to score around 25 to 30 in that, or at least 20 to 25, you are very close to the pass marks. And if you are not able to score on that MCQs, then trying to score all 50 out of descriptive becomes very challenging. So from that perspective, this one is a probable MCQ question. So mark it as an MCQ so that you get a lot. That is, when I am doing audit, what it includes, I will be covering all aspects of an entity. But how he is questioning you is, when I say all aspects are covered, then is the auditor covering all transactions as well? The answer is no. So what we need to remember here is, whatever this table that you can see is what is more important here. That is, auditor will cover all aspects, but auditor will not cover all transactions. Auditor will always go by sampling. So that is what is the MCQ question that is being asked. Will the auditor verify all transactions? No, auditor will not verify all transactions. But will he verify all aspects? The answer is yes. So these are the small points that will help you score good in the examination. Then what is included in the scope? First one is coverage of all aspects. Second one, reliability and sufficiency of information. So that is, as an auditor, you have to collect the information which is required to express your opinion, and the information you are collecting must be reliable and sufficient. And third one, proper disclosures as per the statutory require. That is, to ensure the disclosures that are required as per the statute and accounting standards, you must do everything to do that. Then what it does not include? This is performing duties outside the competence. So take 1 star to it. It was a traditional old question. So that is, giving a simple example. Company bought a two-wheeler, but the motor in it was not good. The company was cheated. But the auditor went by the invoice and he recorded, let's say the company bought it for 80,000. The value recorded is 80,000. But the company was duped and the engine was not good, and it is not worth 80,000. And so one shareholder complained to the MCA saying this auditor also confirmed the motor vehicle, this motorcycle value as 80,000. So you can extend that example to building or anything. In that background, as auditors, we are financial experts. So this, when it comes to this operational things like civil related works in buildings and all that, we don't go by it. To put it in a different way, if the company is buying this building for 5 crore and if the agreement says it is 5 crore As an auditor, I will record it for 5 crore. That's it. So my entry is going to be building account data to party account or bank account, 5 crore rupees. But I won't get into it. Is it really worth 5 crore? How is the structure? Is it a pillar based, and what kind of concrete is used, and what kind of technology is used, and is this, what is the soil testing? All that I can't do it. If they buying it for 5 crore, I assume it to be for 5 crore. So therefore, what it does not include is all the duties which are outside the competence, and whenever there are any constraints on the scope of audit, then you will not be able to perform it. But between this, the first 2 points in this are important. So to repeat it, what it includes and what it does not include. It includes all aspects. Now you tell me, will the auditor cover all aspects or all transactions? All aspects he will cover, and all transactions he will not cover. And that is why we call the technique as sampling. So that is why auditor will be performing on sampling, and we will discuss that as a 5:30 going ahead. So this is what is about the scope. Then the another important topic, you have mostly the repetitive questions in this, inherent limitations. This is again E category chapter, which is the most important, very easy to remember, and very frequently he will ask, and he will continue to ask also. That's why I am saying, as a smart student, don't run behind the typical and the tough accounting, this auditing standards and all that. Don't make your life complicated. To make it more simple and all, go behind the chapters that we are covering today. It will make you pass this exam very comfortably and very smoothly. Now, what are the inherent limitations? But for this to understand, we need little background. That is, as an auditor, when I am giving assurance, my assurance, as an auditor I am giving, is of 2 types. One is absolute assurance, second one is reasonable assurance. There is one more, limited assurance. We'll come to it a little later. But at this juncture, 2 things, absolute assurance and reasonable assurance. Absolute assurance would translate to true and correct. That is, as an auditor, am I confirming true and correct? No, that is not what I am doing. What I am doing is true and fair, which means the word usage of the word fair is nothing but reasonable. So, to repeat it, there are 2 types of assurance. Now, I want you to repeat. What are the 2 types of assurance? Absolute assurance and a reasonable assurance. Now, think logically, or since it's a revision, I take that liberty to ask. Who would be giving absolute assurance? Investigator would be giving absolute assurance. So, whereas as an auditor, I will be able to give only reasonable assurance. That is where from this topic will come. Why the auditor can't give like an investigator? So, why he is giving only true and fair? Why he can't give true and correct? So, that is what we talk about it as inherent limitations. And if we talk about what are the inherent limitations, standard question and short answer question. Why auditor will not be able to give absolute assurance, and why audit opinion is always a reasonable assurance? These are the 4 points. First one, nature of financials. That is, the way the financials are prepared, it includes a lot of estimates. And like say for example, when you provide depreciation, you take furniture and all like 10%, buildings 5%. But is it that this furniture will come only for 10 years? No. So financials include lot of estimates. So the basic point is, when the financial statements itself include estimates, then as an auditor, how can I confirm the estimates? So therefore, one reason why the auditor will not be able to express true and correct, one of the reason is the estimate, the nature of the financials in that estimates. Second one, lot of judgments like moving items, non-moving items, provision for debtors, write-off of debtors. It includes lot of judgments. Like say, one party is not paying you for 5 years. Now, as a management, you assume that then he will not pay and written off that amount. But who knows, maybe next month he may come and pay all the amount. So that's where since a lot of judgments are there, which can't be verified with certainty, auditor also can't do that. And third one, subjective decision. So all these are the reasons under the heading nature of financials. And if you go to nature of audit procedures, why the investigator is able to crack and why the auditor is not able to identify, it is because of the practical and legal limitations. Say the investigator can manhold, say if the CID suspects somebody is involved in frauds, They will even beat him. So if required, they will detain him. But as an auditor, I can't do anything of that with the client. So, and unless I apply that physical force and unless I apply that legal force, truth will not come out. So my area is only documents. How much I can resolve through documents. That's where the practical and legal limitations that I am allowed to do it itself will not allow me to get to the true and correct. So then sophisticated frauds, that is the intelligent frauds, and where the management itself is involved in all this, and which is done within, like say, the same example I keep giving. Imagine some accountant has taken some cash and run away. Now, how long he can run away? Now, one complaint from you, if not today, tomorrow, if not tomorrow, next month, he will get caught. That fraud is not a sophisticated fraud. But sometimes the employees will be hand in glove and they all will join and get into these sophisticated frauds. They create all the documents, sufficient duplicate documents, which becomes very difficult for the auditor to crack it. And then no legal powers for the auditor to get the truth out. So these are the limitations from audit procedures perspective, whereas these are the limitations from financial statements perspective. Then the timelines. You take investigation, why they are able to crack it? Because they take decades and decades. But whereas for auditor, the time and the cost and benefit that are available are very limited. So therefore, I got to manage within the time and within the cost. So obviously, you can't expect me to crack like an investigator. And then apart from this, there are other matters like frauds involving senior management. If the senior management want to help you, then they can. But if the management itself is involved, you can't do anything. And then related party transactions, which are where the scope for fraud is very high. And third one, non-compliance with the laws. If somebody is complying with the laws, then you will get a lot of information. Like somebody is not even raising invoice, he's selling cash sale, then he is not paying GST, he don't follow this one. Then how do I as an auditor get to the truth of it? And then impact of future events on the going concern, say, which you will not be able to make out here. So these are the four broad matters which will make the auditor to settle with reasonable assurance, and that is what we technically call inherent limitations of an auditor. Now, stopping here and going little to revise, come from the beginning. What is an audit? Now, audit, when you want to define audit, you got to remember three words, three sentences or three words. One is, it's an independent examination. And of what? Of financial information. Because we are not verifying the quality of it. Like food inspectors. If they raid your kitchen and they raid your stores. But as an auditor, that's not what I do. When I am examining financial information. Of whom? Of an entity, whichever it is. Even if it is NGO or whatever it is, entity. And why am I doing this? I am doing it to express opinion on the financial statements. Then, as I said, the important point, what I need to verify to ensure that financials are not misleading. Now, this one, I want you to repeat because I've explained it. Now, we will try to learn it for the sake of examination. Now, I'm getting back to it. What an auditor should do to ensure that financials are not misleading. There are 6 points in it. 3 are related to preparation of financials and 3 are related to presentation of financials. With regard to preparation, tell me the keywords. For your convenience, they are the ones which are highlighted in color. And once you remember that, you can build up the remaining statements. That is, what an auditor, first I need to ensure that my entries are correct. So, that is, my financials are in agreement with my entries. And those entries, based on which the financials are prepared, are properly entered. That is, they have been backed up by the supporting documents. And third one is no omission. Now, I restrict here. Now, you tell me. What are the 3 things that I need to ensure to see that financials are not misleading from preparation angle? What are the three things? Financials are matching with the entries. Second one, supporting documents and no omissions. So this is from preparation. From presentation, information is clear and unambiguous, and the disclosure as per AS and true and fair. So these are from presentation angle. Now I want you to repeat for the last time so that it gives you some strength when you are revising. What are the 6 points that an auditor should ensure to see that financials are not misleading. Now, you break these points into two types, preparation and presentation. From preparation, quickly tell me, like a rapid round, what are the 3 points? Entries, supporting documents, and no omission. What are the presentation points? Clear and unambiguous, and disclosure as per accounting standards, and true and fair. So all this 6 points I need to ensure to see that financials are not misleading. Then what are the objects of audit and what will change and what will not change? Now you tell me, looking at it, what are the 2 standards that talk about objectives of auditor? SA 200 and SA 700. Both are almost on the same page, but the language they have chosen is slightly different. If you look at very traditional questions, objectives of the auditor is being asked for 2 marks and 3 marks and all that. So, though it is not a student-friendly language, but you better read this. Now, what are the objectives under SA 200? 2 objectives. First one is to obtain reasonable assurance that the financials are free from misstatement, and after ensuring that financials are free from misstatement, I have to report it. So these are the 2 points. Under SA 700, it's more simple and more student friendly, to form an opinion and to express opinion. Now you can relate it. When I say to form an opinion, what opinion are you forming? Again, on the left hand side, I am forming an opinion that the financials are correct. That is what you put it in a slightly an indirect speech. Financials are free from misstatements. So they don't have misstatements, meaning they are correct. That is what is this, and express opinion is in the form of report. So this is what it is. Now I will ask you that conceptual question. With the change in size and entity, what will not change and what will change? Procedures will change, but what will not change? Objectives will not change. So audit objectives will remain same, but not the procedures. Procedures will change. So this is what we discussed. And then we talked about what is scope of an audit, what it includes and what it does not include. And in this, the more important point, will the auditor cover all transactions or all aspects? All aspects are covered, but not all transactions. So just to see whether you understood this conceptually, he is asking you this. And then what are the 2 types of assurance at this stage? Absolute assurance and reasonable assurance. Which is true and correct, which is true and fair? Absolute is true and correct. Reasonable is true and fair. Now, which one is related to auditor? Reasonable assurance is related to auditor. Which one is related to, with whom it is related to absolute? Investigator. So, and why auditor will not be able to give this? That is what we conclude as inherent limitations. Now, at least let us revise the subheadings. First one is nature of financials. Second one, nature of audit procedures. Third one, timelines and other matters. Now, get hold on this because this is an important one. Now you tell me, what are the 4 subheadings that you can give while defining what are the inherent limitations? Simple. Nature of financials and nature of audit procedures. 2 things. Nature of financials, why will I say? Because it is estimates and because they are judgments and because they are subjective. All or almost. That is, the document that you are giving itself is not certain. You yourself had made estimates and giving it to me. And then how can I certify it for certainty? That way, now let us repeat one more time. What are the 4 subheadings that you can write for inherent limitations? Nature of financials, nature of audit procedures, timelines and other matters. That's all. Under other matters, you write related parties, inner management and all this kind of stuff. And nature of audit procedures, basically the legal angle and the practical angle. Why the investigator is able to, because if there is a fraud in the bank, the police will simply come, take the cashier into custody, they start beating him. So because of that physical pressure, he will start revealing the truth. But as an auditor, I don't have that power. I can't detain a cashier and start manhandling. So that's not allowed. So, and all my struggle is only through around documents. So that's where I may not be able to achieve what an investigator can achieve. So that is what we are trying to say. Now, I will close this. Now you tell me, with the change in size and the nature of it, what will change, what will not change? Procedures will change. Objectives will not change. Now, I am asking only the exam-oriented questions. Then, will the auditor cover all aspects or will he cover all transactions? All aspects are covered, but not all transactions. So, and that is why we have this sampling technique. Now, one last revision. What are the 4 subheadings that you can write for inherent limitation? Nature of financial statements, nature of audit procedures, timelines and other matters. That's all. And later on you can elaborate. So then look at it. Now we are coming into, so till here, it is the basic funda, which was also there from ages. And whatever we are studying now are the new additions. Probably, I mean, new in the sense, not this attempt and all that, with the changed syllabus, which you are having for last 2-3 years. This was not there. These topics were not there at broader level. This was there, but at a very touch and go type. But now he is getting into little detail. So therefore, one caution required is, the topics that you are reading now, you may not see frequent questions in the examination for simple reason, these were never there in the syllabus itself. But since these are all the new contents, the probability of new questions to come out of this is very, very high when compared to the earlier one. So now let's get into it. In this, we will be talking about what is engagement, what is assurance engagement, and what is this limited assurance engagement. That is how we slowly get into it. This will not be a dry, this will not be like a boring one and all that, like the earlier dry concepts. This you can get into it. Now, first one, a broader one. What do you mean by an engagement? So, an engagement is normally, if I'm engaging somebody to paint my house, or I may engage somebody to do my household works, likewise, or I may engage somebody to suggest me on the interior decoration. So the word engage is a very simple word. That's why when you use the word engagement, it is an arrangement to do something. But in our subject, now who are all the people who we are talking about? There are only two set of people, auditor and the client. Therefore, to come back, considering the time availability, what do you mean by a formal engagement? What do you mean by an engagement? An engagement is a formal agreement. And between whom? Between the auditor and the client. So, and to confirm, see, normally, if I'm giving a contract of painting, I may enter into a small contract and all that on a bond paper. But as an auditor, when I am agreeing to the client, with the client on what to do, what not to do, then I am putting it into a proper agreement, and then the question comes, who will be issuing this to whom? Now you tell me, since it's a revision, this engagement letter, who will issue to whom? Auditor will issue to the client. So, and there is one more letter, which is issued by the client to the auditor. Management representation letter. So, as a concept related question, it comes much later. But to avoid confusion, you need to be good with this. So, that's a problem with the audit paper. Because whichever the topic you read, you would require the knowledge of subsequent topics. So, unless you correlate and pull all of them at one place, you will not get the clarity. So, but this SA 580 and all will come much, much later. But we can't wait till then. So, we need to brush up ourselves. So, that's why there are two letters that are issued. One is engagement letter, second one is management representation letter. In short form, in abbreviated form, first one is called EL and second one is called MRL. Now you tell me, who will issue this engagement letter to whom? Auditor to the management. And management representation letter? Management to the auditor. And what are the standards that deal with that? The engagement letter is dealt by SA 210 and MRL is dealt by SA 580. So these are this engagement. Now, moving further to it, we will discuss the further one. And there was one very old traditional question around 10 years ago. That is, since you read scanners, to give you a wide visibility, he will capture 15 years questions and 20-year questions. Therefore, at times you may see these outdated questions. Otherwise, this was a stock question at some point of time. What are the benefits of audit? So, why I need audit? What are the benefits? But if you ask me, nowadays in the current scenario, is getting more into specific concepts rather than the generic concepts. So, I would categorize, though at some point of time it was A category, but at the current scenarios, he may ask once a while and all that, but by and large, this is a C category item. So, it's important. You may see this question in the scanners, but you will see them only in the older questions. Why I need audit? Simple. It safeguards the financial interest of persons, it acts as a moral check, and it helps in settling tax liabilities in all this, and it is useful not only with tax liabilities, even the trade disputes, it will help you to resolve, and detection of wastage and losses for the management. Very logically also, you can think and write. There are no big rocket science that you have to by heart all of them and write, not needed. It's a generic question, and again I repeat, with the current trend of questions, the probability of you getting this is very limited. But 10 years ago, it was there were times when the same question was asked for even 10 marks. So the scanners can be slightly misleading. It's all that. Why do you need audit? Only when I do the audit, I will come to know where I am going wrong. And if I am getting audit done, my team also will be in proper on their shows. That is what we call it as a moral check and all this. And because the auditor is going to report weaknesses and inadequacies, it will help me to strengthen myself. And it will also help me to settle my disputes with various people, with the income tax, with the GST, with my labor, with my parties. So all that if you start writing points, you can easily cover them. So since it is not so important, I am just leaving it aside. This is important. Meaning of assurance engagement, the most important. And again, this is the latest inclusion in the amended syllabus. I repeat it. So you may not see any questions on this topic 3 years ago. So therefore, your scanners are slightly misleading, because as a student, what do you do? If there is a question, if they say that it is asked in 18, 20, 19, 2024, 23, then you start rating it as an important. But that's not how these ICAI exams go by. These ICAI exams go by what has been amended, what has been more trendy, and what is more important as an updation. That is what they keep in mind. So from that perspective, this one, assurance engagement topic, is the most important one. And since you all listen and it's a revision, I take little liberty in going advanced. There are two people. First, I will make you familiar with the terms, and then we will look at the concept. Auditor and practitioner. Now, which is a bigger role? Again, I repeat, there are two roles, auditor and practitioner. Whose role is wider? Practitioner role is wider, because whom do you call practitioner? Whoever is in practice. So he is a practitioner. Then a chartered accountant who is in practice is called a practitioner. Now when I am in practice, it's not that I do only audit assignments. When I'm in practice, I do multiple assignments. And in fact, for some clients, I may go and compile the financial statements. And for some people, I will help them getting the funds. So financial help. So, and for some cases, I may go and do the fiscal verification and all that. So as an auditor, as a practitioner, I keep rendering multiple services. But as an auditor, I am rendering only audit services. So technically, auditor and practitioner, who would play, which is a broader term, and who includes what? Practitioner word includes audit, but auditor word may not be to cover all this. Practitioner. Then look at this diagram. Understanding this diagram is essential for understanding this concept. Again, I repeat, this is from the latest concepts, so we must get hold on this. It may not be student friendly, but you don't have a choice. So now, whenever I am learning this assurance engagement, there are three parties that are involved. One is practitioner, and second one is responsible party, and third one is the intended user. Now, when I say practitioner, you understood. Practitioner is the person, the chartered accountant who is in practice, and responsible party is nothing but the client. So the simple word is the client, but the technical word is responsible party. User is a user, so intended user. Now, here itself I will stop. Engagement and assurance engagement, slightly different. Now, in the engagement, I ask you, what are all the two parties that are related with that? Auditor and the client. With regard to assurance engagement, there are three parties. What are the three parties? Practitioner, responsible party, and intended user. So this is more technical in nature, this concept. That's why you can't write it in a generic way. Whereas the engagement you can write in generic. They accept it, the little light terminology. But this here, all your struggle is to get hold on the terminology. That is what it is. So I repeat. So in the assurance engagement, there are three parties: practitioner, responsible party, and intended user. Now you tell me logically, who will be giving what to whom? Or I will explain one more term, and then I will ask you this question. So these are the three parties that you have learned. But one more technical term you should become familiar is the subject matter. The subject matter can be anything. Say, putting it in a lighter mode so that you all can understand. Subject matter, say suppose somebody came now and he want to give a certificate on the cash holding. then whatever the certificate I am issuing, that certificate will become subject matter. Or if you want me to sign on the financials, then that financial statements will become the subject matter. So therefore, the subject matter is something which this practitioner is attesting. So he is signing it. That is what we call subject matter. It can be a certificate, it can be a report, anything. That is what is the subject matter. Now I will ask you. Slowly we will go step by step. This particular concept, I want to go as low as possible because that is why you are here. Remaining one inherent limitation, even you could manage with by hearting with a little bit of it. But these are the highly technical ones. And as I said, if you are good with chapter 1, at least 6 marks are yours. Very simple, very easy. And even when you revise, hardly it takes half an hour, not more than that. And if something can help you to score 6 marks very comfortably, why leave it? Let's cover it in total. Now, let's come back. Now, I want you to answer. Who are all the 3 parties that are involved in assurance engagement? Practitioner, responsible party, and intended user. Then what do I call the document which I am going to sign? Subject matter. Now, the subject matter, who is issuing to whom? Who will prepare and who will audit or who will review? Responsible party will prepare and give it to the practitioner, and the practitioner verifies it and sign it. But then, is it useful for the responsible party? No. So it is responsible for the intended user. It's as simple as I go to a bank. Now I am a company. Imagine I'm X Limited. I go to a bank. Now I ask him for a loan. Now when I ask him for a loan, he will tell me that, no, get me a certificate of your cash flow statement. Then I will give a loan. Then from whom I have to get the certificate? He says, go to a chartered accountant, get a certificate. Then as a company, I go to the practitioner. Imagine you are the practitioner. Then I come to you, say that I wanted a loan and I never wanted this cash flows. I know what my cash flows are, but this banker wants a certification from you. So, and the banker is not believing. I'm preparing, I'm giving it to him. This is my cash flow. But banker is not ready to trust me. He says, go to the auditor, go to the chartered accountant, go to a practitioner, get it verified and come. If he's signing it, I will take it. So in this background, then as a company, I'm coming to you saying, verify my cash flows and give a certificate. And once you give the certificate, I don't need that certificate. I know my cash flows. In fact, I am the one who gave you that information. Then why do you need that? Because so that you can give it to the banker. So that way, there are 3 parties involved in it. So for the last time, again, I request you to repeat. Who are all the 3 parties that are related in assurance engagement? Practitioner, responsible party, and intended user. Then what do I call the document which I am attesting? Subject matter. Now, learning it technically, this subject matter, who is preparing and giving it to whom? Responsible party is preparing and giving it to the practitioner. Now, practitioner will verify and give it to, for the purpose of this, intended user. So, the ultimate benefit out of this is the intended user. So, this is what it is. Now, there is one more word which you need to get familiar with. That is suitable criteria. Because otherwise, these are the technical terms. As a student, if you read, it will be difficult for you to connect to these terms. So, that's why I am requesting you to listen. What is the suitable criteria? That is nothing but whenever the practitioner is verifying subject matter, he will keep certain benchmarks. Like for example, if I have to certify CSR compliance, maybe ROC had asked one company, get me a certificate from a practitioner that your CSR computation is correct. Then as a company, you come to me, I'm the practitioner. Now say that now my CSR liability is correct. Then what I have to keep? Because to confirm your number, I have to keep some benchmarks. That is how this CSR amount is computed. Where are the provisions are given? Then I know that these are talked about in section 135 of Companies Act. So I remember. So I will have to think of, though I have to take the provisions of CSR of the Companies Act as the basis for confirmation. Likewise, whatever the benchmarks you are keeping it to verify this subject matter, that is what we call technically suitable criteria. So by using all these 5 terminologies, if at all you have to explain assurance engagement, the responsible party is preparing the subject matter and giving it to the practitioner. then practitioner is verifying the subject matter based on the suitable criteria. That is, he had his own benchmarks, maybe how much sample to take, what documents to verify, whatever it is, that suitable criteria. And with that criteria, on his verification, if he is satisfied, then he will issue a certificate, the subject matter, he will attest it, which will be used by the intended user. So this is what are the 5 terms that we have talked about it. Now, you tell me, as a matter of the final time, my assurance engagement, who are all the 3 parties involved? Practitioner, responsible party, and intended user. And 2 more terms, subject matter, and 1 more, suitable criteria. Now, which one is the one auditor, the practitioner is attesting here is a subject matter. Now, who will prepare it and who will verify it? Responsible party is preparing and verified by the practitioner, but used by intended user. So, and when a practitioner is verifying subject matter, how he will verify? Based on suitable criteria. That's all. So, once you remember this, then it's going to be very easy for you. Then we will get into little details. As I said, auditor and practitioner. Who is, now again, if I ask the base question, you will answer. Auditor and practitioner, who plays a bigger role? Practitioner. But then comes the logic. Why? So, why do you say that practitioner is a bigger role? That is what this small note would define. When I use the word auditor, auditor deals with basically historical information. So, whereas as a practitioner, what I attest may include historical as well as projected information. So, that is the difference between the auditor and the practitioner. And this chart that you are seeing now, maybe I'll take it here, is asking latest form of 2 marks questions. So, that is, who would be dealing with the projected matters, so, and who would be dealing with the historical matters. So, with the historical matters, auditor and the practitioner, both of them will deal. But with the projected ones, it is only the practitioner who would deal. That is why you say practitioner role is little bigger than the auditor role, because he is involved in not only attesting historical but also projected. So, that is the background of it. Then we come to one more word here, that is the reviewer. Now, the reviewer, because we learned 3 things. First, he told us what is engagement. Then he told that is a generic discussion. Then he got into what is assurance engagement. Now he is getting into what is a review. So, this review is different from audit. Now, for this point to get hold on it, look at this chart. Once you are good with the charts, it becomes more easy for you to deal with that. There are, earlier we said there are 2 types of assurance, but now that we are getting little deeper into it, now we will reframe those sentences. There are 3 types of assurance: absolute assurance, reasonable assurance, and limited assurance. Now, without looking also, you would be able to answer. Who would be involved with absolute assurance? Investigator. And who is involved with reasonable assurance? Auditor. These 2 we have already covered. And the third person we are covering is this reviewer. So, reviewer is concerned with the limited assurance. So, practically all the listed entities, because since you haven't started your articles, for your confirmation, what is this review? I mean, put it in a simple way, not the complete meaning of the review. Say for listed entities, their annual accounts in any case requires audit, full-fledged audit, but they also want the review of quarterly financials. But that is, once every quarter is over, all listed companies will have to declare quarterly results. So, and whenever you are declaring quarterly results, the management may say anything. My profits are gone up by 30%, 40%. But government is not going to believe. Investors will not believe. They say that go to your auditor and get a certification. But audit happens once a year. So that is where, for all these quarterlies, where we use this review concept more. So this review will also be done for other things. But for you to give an example, review of quarterly financials. But then it is also done by a practitioner. But is he covering all doing that in a similar way like an audit? No. So, whenever he is performing reviews, I will be performing little lesser procedures than the audit. If you take it in sequence, whose opinion is very, very reliable is an investigator's, because he has got legal powers and his documentation is bigger, you can trust him. Little less is reasonable assurance given by the auditor. Little less is limited assurance given by the reviewer. Now, in an order, you tell me, who would be performing fewer procedures, less procedures? Reviewer. And between reviewer and auditor, who would perform more procedure? Auditor. And between auditor and investigator, investigator will perform. Like say, suppose a company bought a raw material. As an auditor, what do I verify? Sitting in the office, I verify invoice copies, gate pass, and these kind of stuff. But if it is given to the CID, he may, if it is bought from Malaysia, the investigator may go even to Malaysia and to see whether this company exists over there. So that way, investigator would perform higher procedures. Now, I want you to see that you understood this concept. Let's revise here. Before come to this, take one step backwards and revise assurance engagement and then come here. Now, when I say assurance engagement, same topic, just that I want you to revise because you're just days away from main exams so that you will get a good hold. Now, assurance engagement. Now, when I say assurance engagement, who are all the three parties that are involved? Practitioner, responsible party, and intended user. And there are two more technical terms. Subject matter and suitable criteria. Now, who is preparing what and given to whom? Responsible party is compiling subject matter and giving it to the practitioner. But how the practitioner is verifying? Based on suitable criteria. He verifies and given for the use of intended user. So that is assurance engagement. Now you tell me, what are the three assurance that I am having? Three types of assurance. Absolute assurance, reasonable assurance, and limited assurance. Now, which is more reliable? Absolute is more reliable. And between reasonable and limited, which will be little high? Reasonable. And who would perform more procedures between reasonable and limited? Reasonable. That is, the auditor will perform more procedures than this one. The same point is what we discuss as the table in it. Now, you look at the table. These are the new ones. It was not there in the old syllabus. Whenever he had changed the syllabus for this current scheme, and that is when these concepts have been added. Otherwise, these were not there before. Now, if you look at it, reasonable assurance and limited assurance engagement, and even to talk about the weightage from the exam, whatever we have been discussing for last 5-10 minutes or 15 minutes, that is where you got higher probability of questions to come. So that is why I am repeating this more, whereas I was not so repetitive in the first few concepts. Now, reasonable assurance and limited assurance. Now you tell me, who would be giving reasonable and who would be giving limited? Auditor will give the reasonable assurance, and who would give limited assurance? Reviewer. Now, which one is high level, which one is low level? Assurance, reasonable assurance is at a high level and limited assurance is a lower level. Who is performing elaborate procedures and who is performing fewer procedures? Auditor is performing elaborate procedures when compared to reviewer. But between auditor and investigator, investigator will perform. So it's a comparable manner. So fewer procedures. And particularly, this second point, he is asking MCQs. That is, who would be performing fewer procedures? He is asking MCQs. That's where, as I keep telling you, your battle is half won if you are able to sensibly guess what is more important for the examination. Otherwise, you start reading all points with the same kind of importance. That's where you go wrong in your this one. Then let's go back. And who will, what type of conclusions? As an auditor, he will draw a reasonable conclusion, and as an investigator, he would get into the reviewer, he would get into the limited conclusion. And that is what he is giving at the end, which we discussed. It is example of this is audit engagement, and example of it is review engagement. Then, one last chart you need to be good with here. This chart. If you are good with this, probably you are helping yourself with 2 marks in your MCQs or short answer questions. That is, now here, I'm not talking about types of assurance. I'm talking about assurance engagements. So, are of 2 types. One is historical and other one is other than historical. So, other than historical is nothing but projected. So, and historical are of 2 types, audit and review. And audit will have the reasonable assurance and reviewer will have the limited assurance. Now, and other than historical, that is where the practitioner would get into it. So as a practitioner, he would get into historical plus other than historical. What are the examples of other than historical? These are the ones. Examination of prospective financial statements. So that is whenever you prepare future financials, so that also sometimes they ask us to confirm the future financials. So that prospective financials is an example of other than historical, which the practitioner would be involved in it. So these are the types of assurance engagement. But the common question that you see is first is asking commonly, there is no difference between audit and review. No, there is a difference between audit and review. Now, you tell me, which is a bigger term between audit and review? Audit is a bigger term. So, who would perform the audit? Auditor. Who would perform the review? Reviewer. Suppose in case you have to draw instantly different ones. And who would perform elaborate and who would perform fear procedures? Auditor would perform elaborate and the reviewer will perform fear procedures. So, and whose opinion is more reliable? Which will have high level of assurance? Audit will have high level of assurance than the reviewer. That's all. And this audit engagements, he is asking this common question, whether whether assurance engagements are all historical engagements. No, it will include even other than historical engagements. Example of it is examination of prospective financials. So now, then a short answer, descriptive question. You can say this is a descriptive question, short answer. So for probably for 4 marks, is asking regularly, including the latest, it is a old question and it is a new question as well. So that is, what are the assurance standards? So that we have. So he will ask you to give about the standard setting procedure and what are the types of assurance standards. There are 5 types of assurance standards. Now one more had come, SQM and all that, but let's not get too deep into it. So there are 5 types: SQCs, SAs, SREs, SAEs and SRS. That is, all these abbreviations comes from the first words of what we have colored in the red here. There are certain standards on quality control, which are called abbreviated form SQC. There is only one SQC as of now. And there are standards on auditing, which are in short form called SAs. The numbering system is slightly different. We will talk about it a little later. And totally there are 38, but out of 38, to be more, I mean, this keeps changing. They keep adding and they keep deleting. If you ask me, as of now, 36 are active. So 36 are active. And standards on review engagements, there are 2. And standards on assurance engagement, which is SAE is 3. And standards on related services, which is 2. So it's a simple question. Considering our time, I'm not able to get to the in-depth of assurance and review and related services. But what are the types of assurance engagement? You have to draw the table of it and give a content to it. Then look at one probable MCQ. That is, these 3 are called pronouncements of ICAI. This is a traditional MCQ come latest MCQ. So pronouncements of ICAI. In the there are 3 types. One is engagement standards, second guidance notes, and third one statement. Which is mandatory, which is recommendatory. So engagement standards, that is all your SAs, SAEs, SRS and all, they are mandatory. And there are certain guidance notes, like guidance note on audit of banks and guidance note on audit of debtors and all that. So they are recommendatory because it is only the guidance given by the ICAI, it is a recommendatory. But there are certain statement, like statement on CORO, statement on audit report. So they are all mandatory. So now here I just want you to revise. What are all the 3 pronouncements, 3 types of pronouncements that you have? Engagement standards, guidance note and statements. Which is optional? Which is recommendatory? Guidance note is recommendatory, whereas remaining 2 are mandatory. This is one probable MCQ, which you may miss it in your regular reading of it. So this is what is the summary of your, with this, you're done with this chapter 1. Now you tell me, what is there in this? There is nothing. And if you hardly start revising, it will not take even half an hour for you to revise it. So, and very quick, very instant, you can complete it and close it. Then, before I close, once and for all, I want you to answer certain questions in a rapid way, then we will go for it. Now, what are the, just revise it and then let's keep it aside. What are all the 3 types of assurance? First one, Absolute assurance, reasonable assurance, and limited assurance. And who will issue what? Investigator issue absolute assurance, auditor will issue reasonable assurance, and reviewer will issue limited assurance. Now, between reviewer and the auditor, now who will perform fewer procedures? Reviewer will perform. And between auditor and the reviewer, whose opinion is little high level of assurance? Auditor. The logic also same. Because he is performing higher procedures, he is working hard. So you can rely on him more. That is how the logic goes by. Now, between auditor and the practitioner, who plays a wider role? Practitioner. Now, between auditor and practitioner, can I say both of them deal with only historical data? No. Who would deal with historical data? Auditor and the practitioner. But apart from historical, what else practitioner would deal? The projected financials also. That is why we say practitioner role is much wider. Then what are the three pronouncements that I have? Engagement standards, guidance notes, and statements. Which is recommendatory? Guidance note is recommendatory, whereas remaining two are mandatory. So now one last question. Let me see how much you remember. What are the four subheadings I can give for my inherent limitations? Nature of financials, nature of audit procedures, timelines, and other matters. Simple. Good. So with this, we conclude our first chapter. But maybe helping you with a little more revision on this tough concept of it. Now, assurance engagement and engagement. When I say engagement, there are two parties. When I say assurance engagement, there are three parties. Now, what are the two parties in engagement? Auditor and the client. And three parties in assurance engagement? Practitioner, responsible party, and intended user. Two more technical words that you need to remember: subject matter and suitable criteria. Now, who is preparing what and giving it to whom? Responsible party is preparing subject matter and giving it to the practitioner. Then how does the practitioner verify this subject matter? Based on suitable criteria. And for whose sake? Intended user's sake. But who will pay the money to the practitioner? Responsible party will pay, because then when you don't have a use, why? Because he will have an indirect use, but the direct use is for the intended user. So I'm not getting too depth to confuse you more. Then engagement letter, who will issue to whom? Engagement letter, auditor to the management. And which letter is by the management to the auditor? Management representation letter. We will get into it. So this is the chapter 1 of it, which is a summary. Now, just take a quick break of 5 minutes, and then we will discuss the most important chapter, that is the chapter 7. So, which deals with this completion and review. Completely standards, and there are definite questions, and close to 10 marks on an average you will have it. Very simple, very limited number of pages, but it's a conceptual based. So, after this, after a break of 5 minutes, we will get on to chapter 7, which is going to help you to score 10 marks. That's why passing this exam, no doubt students find it tough. They find it tough because of their lack of planning. They run behind the standard related chapters because they feel that if they can conquer those chapters, the general chapters they can somehow manage. So in their fight for the tougher concepts, they miss out on these easier concepts. That's why be a smart student. Focus on what is more easy and what are more student friendly topics. So after the break, we will get on to this chapter 7. Quick break because we started little late. So quick break and we'll start this chapter 7. Start with this chapter 7. And this chapter 7, as the weightage that we have seen, this alone can get you somewhere around 10 marks minimum, though the minimum and maximum is 8 to 12, but 10 marks are very simple, all standard based, and these standards are very, very limited in number, limited in content. There are 6 standards that we need to cover. It's completely standard based chapter. That is 260, 265, 450, and then 560, 570, 580. So, first we will cover this 500 series and then come to this 200 series. The first one, subsequent events. So the subsequent events is a 560. In this we will be learning what do you mean by subsequent events and what are the examples of subsequent events, including the types, and then how an auditor should respond to each of such cases. That is what broadly we will discuss. To begin with, What do I mean by subsequent events? Events occurring between two dates, basically. That is the date of financials and the date of audit report. This is the old definition. But when this SF560 got revised, they've added one more timeline here. That is the facts that become known to the auditor even after the date of the auditor's report. So now when I say what are my subsequent events, earlier it was very simple. The events that are occurring between date of financials and the date of audit report. But now it will also include one more level, that is the facts that become known to the auditor even after the date of the audit report. Meaning any event, though I have signed an audit report, like say there is a company, I have signed my audit report, I have issued whatever is the type of report, qualified, unmodified, whatever. But after 2 years, whenever I come to know of some frauds that are happening, then the C point will say that now that you came to know about something wrong in the financials, now revise it. So that way, now with the revised standard, the auditor's responsibilities have been widened. Earlier it was simple. All that I will consider is only the events that are occurring between two dates, date of financials, date of audit report. After that, it's all over. But now I also, whenever I come to know, for any point, even after my issuing audit report, I am concerned. Then, what are the types of subsequent events? There are two types of subsequent events which you know, adjusting events and non-adjusting events. Adjusting events are the events, like the names nomenclature suggests, which you may have to adjust in the books of account. That is why we call them adjusting events, which require an adjustment. And non-adjusting events are the events you don't have to adjust them in the books because that have happened after the financial year, but a disclosure of it is needed. Just to explain, of course, since it's not a detailed class, I may not be able to go in detail to it. Let's focus on the key points of it, but having touched, I will complete. What are non-adjusting events? Say I'm doing an audit of X Limited, and my audit, the financials are getting closed on, let's say 25-26, that is 31/3/26. Now in these financials, there is a debtor from whom the company had to recover, say 20 crore. Now, when you are doing the audit, that is in, let's say, May 2026, this is when you are doing the audit, you came to know that this party from whom you have to collect this 20 crore, there is a major fire accident, and this money may not become collectible. But when you started inquiring little deeper, when this fire accident had happened, you came to know that this fire accident had happened somewhere in April. April 26 is the accident time. So that is why as an auditor, when you are signing in May, you will have a conflict. Because as on the day of May, that is you are signing, this money is not collectible. So because there is a big fire accident, there is a huge loss to him. But since you are not certifying as of May, you are certifying as of 31st March. So when you are certifying as of 31st March, it was very much collectible. So my balance sheet, when I am reporting, it must state the affairs as on the particular date when I am signing. So therefore, as an auditor, I have to call it as a good debt, because as on 31st March, it was collectible. But only thing is, as on the day I am signing, I know that it's a bad debt. So then what do I do? Do I need to make a provision for bad debts? That is where this difference will come, adjusting and non-adjusting. So in this case, this is a classic example of non-adjusting event. I don't have to adjust the data because as on that day it was collectible, but now that it has become non-collectible, I should make a disclosure of the same in the financials. Let's move across. Then, whenever I'm talking about this subsequent events, what are the objectives of it? Say, what are the objects of this auditor under this? First is to obtain SAAE. So, with regard to what are the adjustments that I have to make? What are the disclosures I have to make? That is, what are all the adjusting events and what are all the non-adjusting events? And after identifying what are the adjustments, then I have to respond appropriately to the facts that require amendment to the audit report. Not a very serious point of it. Then, responding to. In this standard, the bigger point that is important is, as an auditor, how do you respond to subsequent events? That would depend upon when is this subsequent event happening. Three scenarios: after the balance sheet date, but before the audit report, and after the audit report, but before the financials are issued, and third one, after the audit report and after the financials are issued. I will just go little slow here and take you through. In the first case, I have not even signed my audit report. So if I see anything, if I come to know anything, I can always adjust. So this is more safe, and I can definitely consider them in audit report. In the second scenario, I've already signed my audit report, but my signed report is still with the management and it has not been issued to the public. But now I realize that something went wrong in what I have signed. And since the financials are with the management, it is more easy for me. I can just go ask them, request them, give me back, we will make the changes, and then I will give you revised one. You can circulate to everyone. So that is, little risk is there, but little less. If the management is supporting, there is no risk. But the management is not supporting, then you will carry the risk even here. In the third scenario, after the audit report, and not only that you have signed, and your signed financials have already been circulated. It has already been issued to the shareholder. They filed it with the MCA, income tax, GST, PF, bankers, everywhere they have filed. But now you realize something went wrong. Then how many people will you inform? How will you go? So that way, responding to the subsequent events would depend on when that subsequent event is happening. So the first one is far more easier, and the complicated one are the second and third. So let's start with the second one. Because this is a small standard, mostly the standard is full of theory. That is what we are trying to convert into some simple charts for your clear understanding, so that you can answer them comfortably. This one, after the audit report, but before the financials are issued. Now you tell me, where is my audit report now? With whom it is? Management. So if I see that what I have signed is something wrong, I can always go and request the management to give it. That's where I've already signed. I gave it to the management. They were about to circulate, but then we realized the mistake. So then what should I do? Putting it in a simple way. First, say I discuss with the management. Say, because I came to know through newspapers, let's say I've signed, take an example of, let's say I've signed TCS. Now everything is over. I signed and gave one copy to them. They were about to file with the people. Then suddenly I saw one news item where they are saying that one accountant in TCS has taken away money and he has been doing frauds. Then I get cautioned. Then if he's doing fraud, then my financials are wrong. So then immediately I will discuss with the management. What is this news we are seeing in the televisions and all? Now, what is its impact? Is it real or is it only an allegation? So I will discuss with the management. And then the management will say, yes, he was involved in it and he was doing frauds. We trusted this guy and he has been cheating by submitting fake bills. Then I will ask him what is the amount involved and what kind of frauds. That is what I am doing it through. Determine the need for amending. Suppose if it's a bigger fraud and it's been happening for quite some time, then I know that I have to amend the financials. But it's a small fraud. He's just a clerk. All he has been doing is not even worth 50,000. He's just increasing the conveyance charges, whatever the people are claiming is, if it is 70, he's adding 170 and taking. So amount is not much. Then I will ignore it. So step number one, I will discuss with the management. It's all sequential. If they say that don't worry, it is only allegation, nothing of that sort had happened, we are clean, then I will drop the matter. But if they say that yes, that is true, what you are listening is true, then I will ask them, then how big it is? Do I have to change my financials? If they say that no, you don't have to change the financials, again I will relax. It's a sequential. But if he says that no, the amount involved is quite high, then I will get into the step number 3. That is, I will inquire. Then if it is to be amended, then how do we do it? Because you got the financials, then I'm asking them, then how will you get the correct fraud? Then you have already closed your books. Then how are you going to make the changes? So I inquire management, how do we deal with this scenario? So this is the groundwork I am doing. First, I will discuss with the management, and then I will see the need for amending, and then I'll ask the management, how will you do it? This is where I may get 2 scenarios. The management may amend the financials, the management is willing to amend the financials, or the management does not amend the financial. That is, they don't want to make a change. Maybe because they themselves are involved, or for some reason, though the management is agreeing, yes, this is to be corrected, but they are not doing it. Then what should I do? So the first one, where the management is willing to change it, then my process is simple. I will notify the management not to issue the financials. I will tell them, okay, now you have agreed to change it. Now don't circulate it, not to issue the financials. Hold it with you. And to the third parties, don't, till the time we necessary amendments are made, don't issue to them. And then after stopping them from issue, then I will issue a new audit report and signing on the new audit amended financial statements, and which they will circulate. The matter gets over and public will not even know it is between me and the client. So this is a safer one. But if the management is not willing to amend the financials, then what do I need to do? So then as an auditor, because they are the ones who will have to prepare the financials, I can't do anything, but they are not amending it. So then what is that I can do? Then I can't prepare it, but I know that what I have signed is wrong. They are with the management. I'm asking them to give, but they're not giving. So what should I do now? I have to seek a legal advice. So in preventing them from further actions and all. So because I can't do anything, I wanted to change. I've signed, my copy is with them, but they are not giving. I don't want that to circulate. So then I want to send a legal notice through the court asking them not to circulate this. What the court will do, if I tell the court, I am the auditor of this, I signed, but I know that there are some mistakes. I don't want the public to get cheated. But these directors are not listening. They are getting ready to circulate. Then the court also will be with me. Then if it is a wrong statement, why are they circulating? That is, then I will tell the court, that is what my concern. They are not listening to me. Then the court will send a direct order to them, stay order, saying, till the time this is properly investigated, don't circulate. So that way, I take legal advice in stopping them. This is when the financials are not yet been circulated. But the third scenario, what if not only that I have issued audit report, but the audited financials are also circulated. The financials are also issued to the users. Then what do I need to do? So then again, I will go back to the same process. First, I will discuss with the management. Now, is it true what had happened? And then if they say yes, then what is the need for amendment? So how big it is? If they say no, don't worry, it's a small, I will ignore. But if they say it is big, then I will inquire. Then how you intend to deal with this? So, and there again, I will have two scenarios. Management may be willing to amend and management is not willing to amend. If the management is willing to amend, then I will amend the report, because since I'm having a management support, I will amend the report. And I will ensure that recipients of financials are informed of the change, because the users are already having my old report. Now, but the management is ready to support me. They say, give me new report, we will send one more time as a new report. So I have to make sure that whoever are having the old one, I have to, through this emphasis of matter, I have to tell them that don't rely on my old report, and I have to alert them. That is what is this point. So to repeat it, wherever you are coming to know of something after the financials are already circulated, then if there is a need to amend, then and the management is willing to amend, you amend the report and you ensure that recipients of financials, because since one copy is already in circulation, you ask the management, then how will you tell them? Then the management says, don't worry, we will issue a letter not to go by this, and we are sending one more. And in the new amendment report, you include an emphasis matter detailing clearly this is what had happened, and we have corrected that mistake. So this is what you will do with the support of management. But if the management is not willing to amend, if the management does not amend, then what do I do? So then first I will tell them, first of all, there is a mistake. And I wanted to tell the management, whatever had happened, let's revise a correct one. But the management is not willing, because they themselves are involved or whatever the reason. Then what do I do? Then I will first try to alert the management, saying, notify the management, saying, if you don't support me, I will prevent the future reliance on the audit report. That is, I will go to the court. I will go to the court and surrender myself, saying this is what had happened, and I am telling the management, but they are not ready to correct it. So I will go and confess. So like how Ramlingaraju confessed in front of public, yes, my financials are wrong. So likewise, auditor also want to prevent the future reliance. So then the management may get a little worried. If they are not changing, then this guy is going to the MCA and writing a letter to them saying there is a mistake, but the company is not supporting. Then MCA will come back very heavily. So now it's almost like a blackmail, so or influencing the mind. Then if the management, earlier they were not willing, but you are almost like threatening them. If you don't do that, then I will take my own action. I will go and report. Then the management may take action and try to do it. But if the management is still not responding, even after your threatenings, or even after you are bringing them to alert, whatever the post language you use, even after you tell them, the management is not willing to do that. Then what do? Then auditor will take appropriate action to seek reliance. That is, auditor will issue a public notice telling everyone, this is what had happened. I signed the audit of, let's say, TCS or whatever, and there are mistakes. We realized, we requested the management to change it, but they are not giving. But in the interest of public, we request you not to rely our report. So that way, auditor will go to public. Then you can imagine, once there is a statement like that by the auditor, then the whole world erupts. So then the income tax department will immediately write a letter. Auditor is saying there are mistakes. What are the mistakes? Why you are not willing to correct? Then the government may even get angry. Despite no mistakes are being known, you are not responding. Go and arrest the directors. So the consequences will be far more severe in the third one. So to cut it short, the important points out of the subsequent events are, I will summarize. It's a small standard. Points are simple. That is, what do you mean by subsequent event? What are the types of subsequent event? And how do you respond to these events? Now you tell me, what do I mean by subsequent events? What are the two dates? First, initially they were there. Date of financials and date of audit report. But what is got added now? The facts becoming known to the auditor even after the auditor's report. So this is the one. And what are the two types of subsequent events? Two types of subsequent events. Adjusting events and non-adjusting events. Which one you adjust, which one you disclose? Simple logically. Which one you adjust, which one you disclose? Adjusting events you adjust, that is why it is called adjusting event. Non-adjusting event, what will you do? You disclose. And where do you disclose? In the financial statements. So management will disclose in the financial statement, otherwise auditor will disclose in the audit report. Then how do you respond to the subsequent events? There are three scenarios. That is when it is happening. Now you tell me, what are the three scenarios that would differentiate between the response of the auditor? First one, after the balance sheet but before the audit report. The second one, after the audit report, before the financials are circulated or issued. And the third one, after the audit report and after the financials are circulated. Now, the first one is easy because since you have not issued audit report, you can always control it. Now, the second one, after the audit report but before the financials are issued, what the auditor will do? First, he will discuss with the management, determine the need for it, and inquire with the management how they intend to do it. If the management is willing to do it, it's very simple. Just alert them, that is notify them. Don't circulate. You have not started circulating. Don't circulate to the third party till the time I give you new one. And then you issue the new audit report so that they can go and circulate. But if the management does not amend the financials, then what will you do? So then you seek legal advice. So, and in the third scenario, everything is same. That is after the financials are circulated, everything is same. But only difference is here you are issuing amended report because one set of report is already with them. So you are issuing amended report, and you also have to tell the readers what had happened, why you are giving this amended report in the form of emphasis of matter. But if the management is not ready to support you in this, then you tell them that you have every right to prevent the misuse of it. But if they don't listen, then you just go and take proper action to prevent the circulation of it. So this is what is the summary of this subsequent events. Actually, if you ask me, the probability of questions coming from essay 560 are 10%. So between 570 and 560, you can expect more questions from 570, little less from 580. That is, whenever you are reading, 570 is the topmost one where you have higher chances of questions to come. Next is essay 580 and the last one is 560. So in the order of priority from exam perspective, so first your essay 570 will come. So going concern, this is where the most of the questions are being asked. Then comes 580, your written representation, and then comes your 560. This subsequent events. So this is the order. So first we discuss that easy one. now we will have to get into this tougher one, that is SA 570 going concern. Now let us, since you are already aware of it, let's revise this. This is most important. You can take it with 3 stars in our traditional way, take it with 3 stars or mark it as a category. In this chapter, this standard you should not miss. So because the probability of a question to come from this chapter is very, very high. Now you tell me, what do I mean by going concern? When I say going concern, what do I mean? Entity will continue for a foreseeable future. So that is, there are two ways how you prepare the financials. Let me see whether you recollect. One is a going concern basis. The other one is liquidation basis. That is, when you are sure of closure, because you are getting amended, you are getting merged, whatever it is, you prepare liquidation basis. Otherwise, you prepare on a going concern basis. When you are preparing on a going concern basis, your entity, you are expecting the entity to continue for foreseeable future. So that is what it is. Then, whose responsibility? Now tell me conceptual question. Whose responsibility it is to ensure that the entity will continue? Management or the auditor? Management, because they are the ones who are preparing financial statements. Say, the logic comes from, whenever you are preparing financials, you know that it is balance sheet, P&L and all. Now, whenever you are preparing balance sheet, you are calling it as assets, you are calling it liabilities. That is, I have to pay to these people, I have to pay PF, I have to pay TDR. That is where a question comes. Will you be there next year to make the payment? So that is where this going concern comes in. But if I know that on 1st April I am closed, I am not there, then why show it as a liability? So settle it. So that is what is the logic behind this one. So since the management is responsible for preparation of financials, making this assumption also is a responsibility of the management. Then look at here. Because it's a revision, I go quickly onto the summary points. Now, whose responsibility is what? What is the management responsibility and what is the auditor's responsibility? Management responsibility is to make the going concern assumption. So, making the assumption is the management responsibility. But then what is the auditor's responsibility? To ensure that such assessment is reasonable. So, this is what is the difference between management responsibility and auditor's responsibility. Then let's move on to it. Then risk assessment procedures. The risk assessment procedures, I'll go a little fast in this because this is not really required to be discussed at length in a revision mode. Whenever I am evaluating my risk, that is whether the entity will continue or not continue, then I would see, but since it is the management who has to perform, I will check with the management whether the management has performed. If the management has already performed, then for my risk assessment, I will discuss with the management. I will determine when the management was evaluating whether they found any such events which may cast a doubt on the going concern. And if they say, yes, there was certain event, then I ask them, then how did you address them? So these three things I will do if the management has done something. But if the management has not performed, then I have discussed that with the management and make inquiries with the management that may cast doubt on its ability. So I have to put it in a simple way. This is slightly, since it is not so important topic, I am not getting really in detail, but to make you understand conceptually, what this says is, it is the management who has to make the assessment. But if the management is not making assessment, you can't simply give a disclaimer of report. So if they are not doing it, you have to do it. Then how do I know whether his entity will continue or not? Discuss with him. Talk to him about future orders, talk to him about future plans, talk to him what he want to do with this. And based on this, now you evaluate whether are there any events caused on it. Indirectly, normally what do? You ask management certain information. If they don't give, you go for disclaimer of opinion. But in this case, that is an exception. They have to do it, but if they are not done it, if they are not doing it, you have to do it. So you can't go for a disclaimer. That is what is this risk assessment procedure. But now we come to the bigger topic of it. This one, please be focused. It was to give you the little background and sensitize you from the exam perspective. Whatever are the indicators, financial, operating and other, traditionally, that is 10 years ago, it was an important question. But over a period of time, because this standard was getting amended and all, there were no questions being asked because it was an amendment, exposure, draft version of it. It was only an exposure form, all that. So that's why it has been sidelined. But now that that amendment has finalized and all that, now again he's started asking this basic question. So this topic that you are seeing, the indicators, it is a category one. So it is the most important one, and he is asking, like right in front of you have May 2025. Give 5 examples of operating events or conditions that may cast a doubt on it. So he can ask you handpick. Now he don't want you to give all events. He is asking specifically about operating events. That is what he is saying. So indirectly you have to read the examples, and whatever the examples that he has given, those examples are mandatory for you to read and remember. So whatever the examples that we are seeing for financial events and this operational events and all, this is the most important topic of it. And he's asking, and as latest as May 25, you can't have more than that. And look at the marks, 5 marks. So you must read and relate. And he can also ask you little different. First we will discuss and then tell you the other set of question. And financial conditions, financial indicators. First one, net liability or net current asset. What do you mean by net current liability? Current liability, you know. What do you mean by net current liability? So that is your current liabilities exceed your current assets. So to put it in a simple way, your current liabilities are more than current asset, meaning what you have to pay is more than what you have to receive. So then what will happen? There will be a working capital issue that will come. So, and if you don't have money to pay salaries, you may have the building, but if you don't have money to pay to the salaries, employees stop working. And if you don't have money to buy raw material, your production will get stopped. So, and if you don't have money to advertise, your sales will go down. So that's why what they say is any net liability position is one of the biggest indicator of financial. And similarly, a fixed term borrowing approaching maturity but without realistic prospect of renewal. So there is a liability, it is coming to closure for the payment maturity, but you don't have any prospects of renewal. You don't think the bank will renew it. But then what will you do? Whatever the security you have given, they will take over. So that is what will happen in this financial events. And the third one, indications of withdrawal of financial support by creditors. So the creditors started withdrawing the support. When the creditors start withdrawing the support, which means then you won't get it on credit. So you have to pay and buy. So obviously all this will have impact on you. Then negative operating cash flows. That is, your operating cash flows have become negative. So you don't have the working capital issues. Then adverse key financial ratios, and then substantial operating losses. Your losses are mounting, and which will again have a big impact on your working capital availability. And arrears or discontinuance of dividend. That is, you stopped giving dividends. When you stop declaring dividends, in fact, you control the outflow. So in a one way, it should have been a positive sign. But what will happen here is, if you don't declare your dividends, then investors will get frustrated. Like imagine you are the investor who have invested like say 30 lakhs, company is not giving dividend. And 1 year you wait, 2 years you wait, 3 years you wait, but the company is not at all declaring dividend. You feel your 30 lakhs got struck. Then can you ask for the refund of capital? Capital will never be refunded. The only one you can take back your capital is going for winding up. So, and once you go for winding up, that is where the going concern concept will come. So, this discontinuance of dividend is also one of the financial indicator. And inability to pay creditor. If you don't pay creditors, what will happen? They will come and take over your machinery, they will come and take over, seize your factory, it will come to an end. And inability to comply with the terms of loan agreement. Your loan agreement you are not able to comply. And changes from credit to cash. So that is, your creditors are not trusting you. And inability to obtain any financing for essential new product development. So for new products, you're not getting the new funding. So it is getting stopped. So you can just read it, but you must read it because he is asking that as an example. In this case, May 25, he had asked about operating. Next time he could ask about this financial indicators. So to repeat it, now you tell me. When I say going concern, there are three indicators to identify it. There are three indicators. What are the three indicators? Financial indicators, operating indicators, and other indicators. So these are the three ones. Then look at the operating indicators. Operating indicators are, just to give an example, you don't have a problem of money. Financial indicator is a problem of money. That is, you don't have money to pay salaries, you don't have money to pay raw materials, etc. But under operating events, it is not a problem of that. But then what is the problem here is the management, they have money. Money is not a problem. But the management is planning to liquidate the entity. So for some reason, maybe owner going abroad, or like you see some of the best run restaurants, suddenly they stop running. Because the person who was running it, he is dead and gone. His children are not interested. Then they will simply sell it to someone and go. Likewise, the owners are not interested to continue. They wanted to liquidate. And there are some owners, promoters, they will develop the company, but they don't want to run it forever. They will develop, they get it to a shape, they will sell that to someone else and go away. So that way, if the management intention is to liquidate, they don't have a money problem, but the intention. And similarly, loss of key management. Important people are resigning without replacement. So, like your managing director had resigned and you are not replacing him with anyone, then how long your entity will continue? And loss of major market, like what had happened to all travelers when Ola, Uber and all came. Otherwise, every colony used to have this Ganesh rentals and Srinivasa rentals and all this kind of stuff. But with Ola, Uber and Rapidos coming, you don't see the travelers at all. They have become very negligible. So that is loss of major market. And labor difficulties. You don't have money problem, but you have labor issues. Maybe in that area, because political leaders are active, like Amar Raja batteries were sent from this AP to here. Nothing to do. It's not a problem of money. It's other political issues and all that. And shortage of important supplies. Like what we all have seen with the Iran war, and many restaurants got closed and all this. Luckily, we were able to bail out. Imagine if that is closed completely and this fuel is not available, what would have happened? All restaurants would have gone bankrupt, like the COVID time and all that. And emergence of highly successful competitor. That is, you are doing good, but the very tough competitor has come up and he is grabbing you all your business. So these are all operating indicators. And the question that is asked is also that only. That is, give 5 examples of operating events that may cast a doubt. So you are supposed to remember and write this 5 operating indicators. So next time he can ask you about the financial indicators. Apart from that, other indicators. That is non-compliance with the capital requirements or any other statutory or regulatory requirements. That is, if you are not paying GST return, if you are not filing GST returns and all that, they may come and seize your factory, or you are an STPI unit and you are not filing the required annual returns, they will come and close. So that way. And then pending legal and regulatory proceedings. That is, there are some legal cases which are pending, and such legal cases are so huge that if the company is losing, they may not be able to pay. Huge amounts of tax litigations and changes in law. So, like how the government had banned certain apps which were making gaming apps and all that. They were doing good, like TikTok and all that. So many people were active, so many people. But with one government decision, entities are closed. So that is what he is talking about. The last one, uninsured or underinsured catastrophe. Catastrophe is major accident, so type. So it is bigger than disaster. So that is what is catastrophe. So it is not insured, like big fire accident happening in the company and all that, or there are earthquakes. That is what will come under this category. So these are all the examples. Going back to it, now you tell me. Whose responsibility it is to evaluate the going concern? Management or the auditor? Management. And then what is the auditor's responsibility? To ensure that that is reasonable. And what are the 3 indicators you have here? Financing, financial, operating, and other indicators. So financial one is all about financing. Operating, it is all about operating it. No money problem, but labor problem and the lack of availability of material and all this. And other problem is compliance with the legal and law requirements and all this. And look at some other type of questions, what he is asking. One is, you will get a direct question like this. And the other type is, he is asking, following are the examples of events or condition that may cast a significant doubt on the going concern. Which one of the following is an example of operating event? Now, you read it and tell me which one is among this four is an operating reason, operating indicator. So, the first three are financial indicators. That is adverse key financial ratios, or inability to pay creditors, or withdrawal of all money related. But the operating one is shortage of important supplies. So, like we talked about Iran war and where the some of the companies are getting closed, likewise. So, these are the two types. So, this is important for you to learn. Then we go to the last, and because it is revision, I am not getting into the paragraph wise this one. I am touching only what is important for exam. Then the conclusions. This is actually the most important one. The standard itself is important. In the standard, these conclusions are the most important one. Here, how do you conclude? That is, you have evaluated whether the entity will continue or do not continue. Then what will be your answers? Three things. Appropriate, that is, entity will continue, and the fag end of it is inappropriate. You believe that no, there are so many problems for the company and it will not continue. Inappropriate. Or in the middle, you may consider it appropriate, but uncertainty exists. That is, you believe it is appearing to be okay, but there are some doubts. So, auditor is not fully convinced. These are the three scenarios. First scenario is simple. Wherever you conclude that your going concern is appropriate, that is, the entity will continue without any problem, then you will issue an unmodified report. Unmodified report, or it is also called clean report. Your discussion would be around these two. Appropriate but uncertainty exists, and inappropriate. Look at the second one. And this also he is asking questions. I will show you the questions. That is, there is an indicator that your entity will not continue, and but when the auditor had inquired, he got satisfied, but not totally. So that is why he is finding that it is appropriate, but still that uncertainty exists. For example, when you receive a huge notice, like sometimes the government will send massive income tax notices. Say your company has received some 2000 crore notice, income tax notice. Now, when you are receiving such huge notices, what will happen? Then you go and talk to the people. They say that no, everybody got this kind of notices. Don't worry, nothing happens. So, but if it really happens, if the government really, like when the Hydra came, everybody was thinking, many people, buildings were under scare. The government can come and destroy anything. But will they really come and destroy? No, they won't be destroying thousands of homes. So that, but still there is an uncertainty. Likewise, it is looking all right, but not everything is clear. So there is still uncertainty exists. Then what should I do? It would depend upon whether that uncertainty is disclosed in the financials or this uncertainty is not disclosed in the financials. If that uncertainty is disclosed in the financials, then you will issue, because since the management is already explaining that, then you will issue an emphasis paragraph. But if the management is not disclosing it, but then it is a fraud. So that is where you will go for qualified or adverse report. So simply you will go for modified report. Modified report. But here you don't have to go for modified report, because the management is very clear. They are very transparent. They are saying that yes, we have received a big legal case. Somebody had filed a legal case, like how some at times we see on the eateries, like some of the soft drinks and all this, like Karachi Bakery, for example. Some time ago, this food inspectors and all have raided, and they understood that the kitchen is not hygiene, and they have issued the notices. But will anything happen? Will the government ban Karachi outlets and all that? That time the decision was not taken. That's where, but now it's all right. Now it's all functioning, and they will levied some 10,000 penalty and it is functioning. Likewise, Wherever there are uncertainties, disclose them. If the management is disclosing them, then the auditor will simply give an emphasis of it. So, but if the management is not willing to disclose, but there is an uncertainty, then auditor will say that no, you don't continue. So, auditor will issue a modified report. So, let me give you that comfort, or I'll complete that inappropriate and then we will revise, because this is what you will get in the examination. Inappropriate is auditor believe entity will not continue. And as an auditor, when you believe entity will not continue, what do? Then you start analyzing then how the financials are prepared. Were they being prepared in going concern basis, or were they prepared in liquidation basis? If they are prepared in going concern basis, which is incorrect, the entity will not continue, but they are preparing the financials on going concern, then you will issue an adverse report. But on the other hand, the company is aware, like planned mergers, for example, SBI and SBH, for example, SBH, SBM, State Bank of Mysore, State Bank of Patiala, all this, they have taken a decision. You take even why SBI. Many banks got merged with other banks and all that. So, when the bank mergers are planned and government already told that after this 1st April, this bank will not be there, then the bank which is going to close, they would have been preparing in a liquidation basis. So, at times, when a going concern need not be like companies in huge losses closed. Sometimes it can be a planned closure also, likewise. So, if the company has already prepared it on a liquidation basis, then what will you do? Then you will issue an emphasis. That's all. Because since they have already prepared it on a liquidation, there is nothing for you to doubt in that. So you will issue an emphasis. Now, I have discussed, I did my bit, but now to give you comfort, I need to stay back and I have to make you familiar. Now let's go back. When I say going concern, first of all, what is the number of standard of going concern? Look at it and tell me, no issues. But what is the number of the standard of going concern? SF570. SF570 deals with this going concern. When I say going concern, entity will continue for how long? Foreseeable feature. So entity will continue for a foreseeable period. Then whose responsibility it is to make this assumption? Management. Then what is the auditor's responsibility? To ensure that this assumption is reasonable. Now one conceptual question. What if the management is not evaluating? Management is not willing to make that assessment. Then can auditor give a disclaimer? So that's where if the management is, they have to do it, it's their responsibility. If the management is not doing it, auditor had to do it. So that is what is the small conceptual related clarity for you. Then what are the 3 indicators? Financial, operating and other indicators. Which one is related to money? Financial, logically. Operating is related to operations like labor problems, raw material problems and all that will come, change in laws and all that. And then you have other indicators. Now, then based on your analysis, you may come to one of these 3 conclusions. Appropriate. Now, or you tell me as a revision, what are the 3 types of conclusions you can come? First is, talk about the extremes first. Appropriate or inappropriate. In third one is appropriate, but uncertainty exists. So these are the 3 ones. Now, for my sake, let's revise one more time. What are the 3 types of conclusions we would get into? Appropriate, inappropriate, and appropriate, but uncertainty exists. Now, having discussed it, let me see how much you remember. What do you do in this middle case? Appropriate, but uncertainty exists. You discuss with the management whether they have disclosed that uncertainty or not. Now, if they have already disclosed, will you issue modified report or will you issue emphasis? Emphasis. But if the management has not disclosed, then you will go for modified report, either qualified or adverse report. Then the third one, inappropriate. Then what will you do? Then you will see how the management has prepared the financials. If they are prepared on a going concern basis, which is wrong, then you will issue adverse report. And if they are prepared on a liquidation basis, you will issue emphasis report. Now, I will hold back here because this is the important point. And if I pass this on without discussing, it will be difficult for you. Now you tell me, what are the 3 indicators that I am having in going concern? financial, operating, and other indicators. To make you more familiar, which standard are we discussing now? 570, which deals with going concern. Now, when I say going concern, how long the entity will continue? Foreseeable feature. Then what is the other assumption? Apart from going concern assumption, what is the other way of preparing financials? Liquidation basis. Now, when I've analyzed this, what are the three probable conclusions that I can come in? Appropriate, inappropriate, appropriate, but uncertainty exists. If I look at your report, basically you've got two types. Either you are issuing modified report or you are issuing an emphasis. That's all. In trying to explain it to you differently, or I will explain the whole concepts. Like there are three types of conclusions and all. There are three types of reports. One is a clean report. Second one is a modified report. Third one is an emphasis. Learning it in a different way. Say three reports. First one is clean report. Second one is modified report. Third one is emphasis, EOM, what we call. Now you think and tell me, when am I going to issue clean report? Appropriate. This is a simple one. Now you tell me, when am I going to issue a modified report? Inappropriate, but the financials are prepared on going concern basis, situation 1. Situation 2, uncertainty disclosed or not disclosed? Not disclosed. Then you will go for modified report. Now, when will I issue EOM? Inappropriate, but liquidation basis. Second one, appropriate, but uncertainty. Uncertainty disclosed or not disclosed? Uncertainty is disclosed. Then you will go for EOM. If uncertainty is not disclosed, there is uncertainty but not disclosed, then you will go for modified report. Now, we will stay back here for one more time, because the more you revise, since you are only days away from exams, even if you get a question, it will be convenient. Now, again, I repeat the same questions. Two types of presentation of financials. Liquidation basis, going concern basis. Now, three indicators of going concern. Financial, operating, and other indicators. Three types of conclusions. Appropriate, inappropriate, appropriate but uncertainty exists. Now, three types of reports. Clean report, modified report, emphasis report. Now, clean report, when will I issue? Appropriate. Now, modified report, when will I issue? Two scenarios. Inappropriate, but going concern basis. Second one, uncertainty disclosed or not disclosed? Not disclosed. Now, emphasis, two scenarios. Inappropriate, liquidation basis. Second one, uncertainty is disclosed. So, that is when I would go for it. That's all. So, once you close your eyes and start thinking like this, there is nothing. So, with this all the three types of conclusions and all are over. Now, just to make you familiar, how a question can come. Now, look at it. This is also one of the new type of questions, May 2023 for 4 marks. Now, S Limited, a large textile manufacturing company, due to heavy recession in the market, was unable to collect amount of used receivables in time and also holding large amounts of stocks of raw material and finished goods. So, there is a heavy recession. That is, market is very volatile and it is unpredictable. Now, from your primary observation of audit evidence, you feel that there is a material uncertainty exists. Is clearly given. So, material uncertainty exists. If material uncertainty exists, now you tell me what are the two different reports you give. Either modified or emphasis. When will you give modified? When will you give emphasis? If it is disclosed, emphasis. Not disclosed, modified. That's all. So, once you have broad vision, then look at the question what he is asking. How will you deal with the report? What will be the effect on your audit opinion in the following scenarios? If adequate disclosures of uncertainty is already made, emphasis. If that uncertainty is not made, modified report. That's all. So, this is how you get. That is why I am saying, don't get struck with the lengthy notes that is given in the material. Look at the chart. Simple. 3 conclusions, 3 reports. It's all about match the following. That's all. And once you analyze in that reverse order, it is going to become far more easy. And SF 70, you do get questions. And both the topics are important. Indicators are important and conclusions are important. So before going exam and one day before exam, you must read these two particular topics to score yourself good marks of it. So with this, SF 70 is also over. Then there is one small concept. What do you do? This, of course, we talked about it. What is that? When the management is unwilling to make, I will further elaborate, because probably this is the one which he is not asking, but he can ask. I will go one step backwards and give you that comfort. And all these points are such a simple points. If you have listened once, even after a month also you will be able to recollect. It's all simple, just that you need to be explained about practical one. Now going concern, who will have to, I'll come in a sequential order. Who will have to make the assessment? Management or the auditor? Management will have to make. But if the management is not making, who will have to make? Auditor will have to make. But as an auditor, I am ready to make. But I can't tell you whether your business will continue. I need to sit with you. Like there is a restaurant here, Udupi restaurant. Whether that Udupi restaurant will continue or not, how will you know? You have to speak to the management. Ask them what are your future plans, who is running it, what is his age, will he continue? So you have to discuss with the management. But in this scenario, I'm treating this as A category, because there is a probable question that can come. That is why I am elaborating little more on that. Otherwise, as a student, you may not be able to be clear. That is, what should I do when the management is not doing it? They are not doing it in two ways. They are unwilling to make the assessment. That is okay. I said, okay, you don't make. I will make, just answer my questions. But the management is unwilling even to extend the support. So they are unwilling to give this one, or they are not even ready to extend the support to the auditor. Then as an auditor, what do I do? If you are not doing it, I am ready to do it. But for that, I need some answers. You don't even give the answers, then what I can do? So then two things. Auditor will consider the implications. Now, what are the implications of this issue? Is it simple? Then I'll ignore. If it is critical, then I will issue a modified, or probably a disclaimer of opinion. I will go for it. That's all. So this is what the auditor would do if the management is unwilling to make or unwilling to extend the support to it. That is what is this last point of it. So SF 570, SF 580, we will come to it. But before that, there is a small standard on evaluation of misstatements identified during the audit and all this. For this, I will directly, it's a small standard, so let us look at the summary and close it. First, you need to understand, what do I mean by misstatement? Now, when I say misstatement, that is an error, putting it in a student language. But what is an error? That is, you will call it as an error if there is a difference between what should have been reported and what is reported. Say, if depreciation 80,000 should have been disclosed, but they are disclosing 30,000, then there is a misstatement. So, to put it in a, because this word and the definition of misstatement is required in multiple chapters. It is again required in your chapter 3 also. It will come, risk of material misstatement and all. So, learn this definition of misstatement. Misstatement is nothing but the difference between what is reported and what should have been reported, or what is required to be reported. So, like say this table is bought for 5,000. I have seen the invoice, it is 5,000. So, my expectation is, even in the books, it is debited with 5,000. That is what is required to be reported. But if the accountant by mistake, he is writing 15,000, then that is a misstatement for me. So, what is reported and what is required to be reported, the difference is what I call it as a misstatement. Now, this misstatement, look at the types of misstatements. Identified misstatements, unidentified misstatements. That is, auditor may be able to identify certain errors because of what he is verifying. But since now again I'll go back to our morning topic. Will the auditor cover all aspects or all transactions? All aspects. He will not cover all transactions. That's why as an auditor, because I'm not checking all transactions, there may be certain misstatements which I have not identified, unidentified. That's how there are two types of misstatements, identified and unidentified. And identified is again of two types, corrected and uncorrected. Now, I just want you to revise this content. Now, you tell me, what do I mean by misstatement? Difference between what? Reported and required to be reported is misstatement. What are the types of misstatement? Identified and unidentified. Which is further divided? Identified. That is divided into corrected and uncorrected. Now, which is not a problem for you? Identified and corrected. So, there is a mistake. It is already been identified and it is even corrected. So, now there is no mistake. But you are concerned about two types of errors. One is identified uncorrected and unidentified. Unidentified, it is only your expectation, because like say I check 10%. Now I got an error of 30,000. Then I start thinking, what could be the hidden error? Then I use all my permutations and combinations, and that is unidentified. We will discuss that. How do we do that in SF 30? But there are at times you identify, but the management may be unwilling to correct it. They say that no, I can't change the figure. If I change, then everything will have to be changed. Then it will affect my profit. And once profit is changed, then CSR will change, tax will change, my commissions will change, managerial remuneration will change. So I don't want to take it. We'll pass entry in the next year. So sometimes they don't even, though the mistake is identified, the management will not be correcting it. So that is why we are trying to do that. Then when auditor is identifying a misstatement, what he should do? So any misstatements identified by the auditor, he must communicate to the management on a timely basis with a request to correct. So because when you read the standard, let me be honest, going concern, at least you can read and relate. But this SA 450, you read, you don't know what you're reading. It will not give you a clear-cut approach. That is where we are learning, trying to learn through this charts and the simple ways. So the third point, what an auditor should do if he is identifying a misstatement. Compare it with for your understanding and ease in understanding, I'll tell you. Say as a faculty, I'm correcting your papers. Now I saw an error. Now, when I see an error, what do? I'll simply put an into mark and I'll not give the marks. You fail and you will have to write next time. But likewise, as an auditor, if my client is doing mistake, is it that I'll simply strike it off and say, again, come next year? No, I won't do that. So that's where what an auditor should do if he identifies a mistake. Now, shall I go and start telling everyone that this guy is doing mistake and all that? That's where what ICAI is telling. There may be misstatement. But just because there is a misstatement, you don't start going and reporting on like a teacher and all that kind of stuff. So then what is my duty? If I see a mistake in the accounts, what should I do? That's why they're saying, if you see a mistake, don't start writing the report. First communicate to them and communicate to them immediately. There is an error, invoice is 4,000, but by mistake it looks like you have written 40,000. So tell them, communicate with them. And why am I communicating with them? And I'm not only communicating, I'm communicating with a request to correct it. And if the management is willing to correct, then I'm not going to tell everyone, this guy did mistake, I corrected it and all. I'm not going to do that propaganda. So auditor is a positive person. So that background you need to have to understand what is he asking. That is, whenever there is a misstatement, what should I do as an auditor? Then you don't start drafting the report and tell everyone. First communicate to the management on a timely basis, that is immediately, and then ask them to correct it. If they are correcting it, it is all right. If they are not correcting, then comes the question. So that is what will become our next topic of it. Then I'll try to see whether I have prepared the last chart of it. So because I wanted to connect with you first logically and then take you through the standard so that it becomes easy. Now I requested the management, but the management is refusing to correct. That is, I did my job, but the management is unwilling to correct. Then what should I do? If the management is unwilling to correct, then three things. Identify the reason. Talk to them, find out why they are adamant, why they don't want to correct the mistake. They may have a reason for it, or they may be simply adamant. Find out the reasons. And that reasons, may clarify you, saying maybe sometimes it could be your misunderstanding, but once you talk to them, you will come to know the things will get sorted out. So identify the reasons and evaluate the implications. If you are not convinced with that, the reasons, then what is its impact on my report? Because as an auditor, you are concerned only on the financial. So what is its implication? And if the implication is negligible, forget about it. But implication is large or huge, then you modify the report. So cut it short. What an auditor should do if the management refuses to correct? Three things: identify the reasons and evaluate the implications and modify the report. That's all. So if you are good with these 4 points, you can answer any question out of this. I'll come to this question, but I will take you back. This simple. That's why the standard students get worried, because you assume that you have to read a lot of content and all. Not required. So certain topics you can go selective mode and read it, because it is rest of the topics are only an explanatory nature. It will not hurt you. Now you tell me, what is the standard number that we are discussing now? SF 450. Now when I say misstatement, what do I mean by misstatement? Difference between what? Reported and required to be reported. What are the types of misstatement? Identified, unidentified. Which is further divided? Identified. Divided into what? Corrected, uncorrected. Now what is the risk factors for auditor? Two factors: identified and uncorrected, and unidentified. So as an auditor, I will see that this identified, uncorrected plus unidentified are not not making my financials misleading. That is what is the auditor will try to do that. Then whenever I say misstatements, what should I do? As an auditor, whenever there is a misstatement, what should I do? Communicate on timely basis. For what? Why will I communicate? Asking them to, requesting them to correct it. So since I didn't hear from you, I repeat one more time. Whenever I am identifying misstatement, what is auditor's responsibility? Communicate on timely basis and request them to correct. Then logical question will come. If they correct it, it's all right. But if the management is unwilling to correct, we talked about it. Try to guess it, then I will put that screen. If the management is unwilling to correct, identify the reasons. Think aloud. Identify the reasons, evaluate the implications, and then modify the report. So these 3 points, if you learn, this will help you not only for the standard. This is the practice which auditor follows for multiple standards, be it in SF 530, be it multiple standards. Same point will keep coming. So remember this. So what auditor should do if the management is refused? Because this is more simple to read and more simple to understand. And mark my word, you will get full marks of it, because whatever you are taking with the technical words. Only thing is, in the text form he has given in more elaborated form. Your mind will not be able to remember sentences. That's where this is simple. What as an auditor I should do when the management is unwilling to correct? 3 things: identify the reasons, evaluate the implications, and modify the report. That's all. These are the 3 things that I will do. Then in case you are not able to write, or I have to move because it's a time restricted and all, anyway they are going to post it in YouTube and all. You can just stop it at that, take the screenshot and manage it. With that confidence, sometimes I keep moving it. So with this, this chapter is over, and there is only two small points that are required as far as this misstatement, which we didn't discuss. One is, auditor should always accumulate the misstatements and compare it with the materiality. That is, apart from whenever I am doing an audit, let's say first I will determine the materiality. Like say 40,000 is my materiality. Now whenever I am checking cash watching, now I got errors of 10,000. Then whenever doing purchases, I got 20,000. So one statement you have to do is, for conclusion, auditor should accumulate all the mistakes. I should not look at it independently. Okay, in the cash there is a 20,000 OCHA, but that is all right. In the purchases, again I got 20,000 mistake. So since it is 2020, my tolerance is up to 50,000. Everything is fine. I shouldn't be that. I should aggregate. That is what we call it. Add up all your mistakes and see whether it is exceeding your materiality. So one small point is, auditor must accumulate all the misstatements for comparing it with the materiality. And the second point, which is maybe important, but which it didn't come in this is, auditor shall always request for a written representation. That is, whatever the management is not correcting, because you told them, but they are unwilling to correct, then why you question them? Practically you ask them, when I am telling you there is a mistake, why are you not changing? Well, you can't behave like an attitude. What is your problem? Then the management will tell you. Now, so this is like say a simple, for example, I'll tell you. There are 5 computers that are supposed to be there, but when I came for physical verification, now I got 8 computers. Now, then I thought maybe 3 computers you bought but didn't record. Now, why this variance? Then the management told me only 5 are ours, remaining 3 are what we have taken on a lease basis. So, they are not ours. So, but then I'll ask the management to give it in writing that these 3 are. Likewise, when the management is unwilling to correct, they may have their solid reason. That is why you take this written representation saying that, yes, this is the reason and why they are not correcting it. Keep it with you, saying for 2 things. Either they may give you the logic, or they may tell you that this uncorrected misstatements are not very material. Whatever it is, you have to take it. So to go back to it, now I want you to, as a final round, tell me quickly. There are only 4 small boxes. That's all. If you read this, your essay 450 is over. What do you mean by misstatement? Quickly. Difference between reported and required to be reported. What are the types of misstatement? First, identified, unidentified. Which is further divided? Identified into corrected and uncorrected. Now comes the question. Whenever as an auditor I identify a misstatement, what should I do? Communicate on a timely basis, asking the requesting the management to correct it. What if the management is not doing it? Identify the reasons, evaluate the implications, and modify the report. That's all. As long as you are able to do that in 5 minutes time, you are good with this topic and all that. That's all. And another one is, as I said, you have to the auditor must accumulate it, and auditor shall obtain a written represent. Take it in writing why they are not correcting. That's all. That is what is the simple logic. Now, to make you familiar, look at the question of May 2024 so that you can understand how the question can come. This Up and High Private Limited has started its export business during 23-24. The company was catering to the domestic market only in the past few years. CAH, stat auditor of the company, is of the view that company has understated its revenue by 50 lakhs. That is, they have shown lesser income in 2023 by not complying with the requirements of AS 9, which deals with the income recognition. Now, discuss the responsibilities of statutory auditor to communicate with the management in the above situation in accordance with SA 450. This way. So, as an auditor, how to connect with the concepts that we read is, as an auditor, imagine you are the auditor. Suddenly you realized this income is understated. That is, there is a misstatement. What will you do? Communicate on a timely basis and asking for correction. That is what you will do under SA 450. Then, if the management, then the next question. If the management refuses to correct, what will you do? Identify the reasons, evaluate the implications, modify the report. That's all. So that is what is the question that is asked. And these are not the old questions. These are all the latest questions. So this is how you will be asked questions and all. Very simple topic. Don't neglect and don't ignore this at all. So, and then we move on to this SA 580. So SA 580 deals with the written representation. Now you tell me. Again, I will go back to the morning topic. Engagement letter. Who will issue to whom? Auditor to the management. And management representation letter? Management to the auditor. So that is, this is also very small standard, I'll tell you. Like misstatement, if you want to read page by page, paragraph by paragraph in the material, it looks complicated. You get confused. But what is really required for your exam, it's a simple one. Like there are 4 tables which has given you complete on SA 450. Here also, you need to know first, what do you mean by written representation? Meaning is important. So written representation it is a written statement. Who is giving it to whom? The management is giving it to the auditor, and why? To confirm certain matters. So that is what is this written representation. But there is additional point, that is any written representation in this context we do not include finance, because financials also management will sign and give. That is not, auditor will not treat it as a written representation. Now, since there is a revision, I'll go quickly and touch on the main points, because this is something you are clear about it. Now, written representation, the one complicated question he is asking and the conceptual question is, can an auditor consider this written representation as an audit evidence? Because that is the one which he will keep asking. So, can an auditor consider this written representation? First of all, I'll put that in a simple and easy way, like how we learned SF 450. This is, let's learn it in a simple way. Most of the questions you yourself can answer. Now, again, I repeat, what is the number of the standard? SF 580. And this written representation, who is giving it to whom? Management is giving it to the auditor. Now, then is it optional for the auditor or mandatory for the auditor to take this? This written representation, is it mandatory or optional? It is mandatory to take it, because instead of you reading it, I am giving it in a simple bullet points so that you are good with the concepts. Now, it is mandatory for auditor to collect it. Now, so I must take written representations. Then, can you use this written representations as an audit evidence? Will it serve as an SAAE, sufficient and appropriate audit evidence? What they say is, it's a simple one. Maybe that diagram didn't come, but doesn't matter. I will explain. Can I use my written representations as a sufficient appropriate audit evidence? That would depend upon whether alternate procedures are possible or alternate procedures are not possible. If alternate procedures are possible, me taking only written representation is not acceptable as a sole audit evidence. I repeat with an example, because this point he is asking in a case study mode for 5 marks. So, and as a student explaining this, you may find it little difficult. So, listen carefully. I am an auditor. I have to do the closing stock inventory verification. I can go to the stores and verify, but I became lazy. The moment I opened the store, it was a huge store, so much of stocks. Now, as a shortcut and as a lazy auditor, now I am saying, okay, I can't verify, but give it in writing that yes, you had 50 lakh material, then I will take it. So now the management is saying on a bond paper, you can imagine even on a bond paper, not only on the letterhead, yes, we are having 50 lakh worth of it. Now I am taking that and keeping it as an audit evidence and certifying the balance sheet. Tomorrow if somebody asks, why did you certify that 50 lakh? Now I say that management has confirmed. So that is the question you have to keep in mind. Can I really take that representation as a sole evidence and start signing the balance sheet? The answer would depend on whether there are alternate procedures possible or no alternate procedures possible. In the example I gave you, inventory, you can go and physically verify. There are alternate procedure possible. So therefore, they won't allow you to take this as a sole audit evidence. Then it cannot form sufficient appropriate audit evidence, because you can do. And indirectly, then if this is allowed, think logically. Then my audit will get closed in one day. I go to the client. Now, are you sure that debtors is actually 50 lakhs? Yes, he says 50 lakhs. Then I say, give it in writing. He will give one writing. Yes, I have to collect 50 lakh. Then you are signing. Then you ask him, now is your depreciation correct? He says that yes, it is correct. Then give me a letter. He'll give. Then taking all letters, can you sign balance sheet? Then why are you there? What is that your value addition? That's why wherever you have to verify, wherever alternate procedures are possible, written representation alone on its own, so cannot be fulfilling your SAAE. But where it can still work as an SAAE, where there are no alternate procedures. Like for example, there is a non-moving material, or there is a debtor which the company wanted to write off. Now, then I ask the management, why are you writing it off? Management feels that, no, we don't think this guy will pay. Now that is their estimate. So, but what is the guarantee they can give? And what is that I can verify that yes, it is a bad debt? There may not be any evidence. So there is no alternate procedure. It is an estimate. So when it is an estimate, then I can take this written representation as a sole audit evidence. But that is for estimates, it is accepted. But wherever you can work, then it is not accepted. Same point, technically, whether written representation can be considered as an audit evidence, sole audit evidence. Now you tell me, instead of me going on talking, now you tell me in which situation, I'll reframe my question. In which situation written representation can be considered as a sole audit evidence? When there are no alternate procedures possible. That's why whenever in the note that you take it in a chart type, whether alternate procedures are possible or alternate procedures are not possible. If it is possible, then no, you can't take this written representation as a sole audit evidence. But wherever it is, not possible, then yes, you can consider this as a written representation. But the ultimate point remains, whether you have alternate procedures or you don't have alternate procedures, you must obtain written representation. Only thing is, wherever alternate procedures are possible, your work is of two types. Take the representation from the management, you also verify yourself. So I have to do two things. But wherever alternate procedures are not possible, I will only take written representation. That is what is how you need to understand the conceptual clarity of it. Then objectives of written representation and all fine. I'm getting into the important ones. Then before I come to this contents, this point is also important. From whom should I take the representation? Now if I ask you, the management will give. But there are one more word, apart from the management, there is also those charged with the governance. Then should I take it from management or should I take it from those charged with the governance? Who are the right people? That's why since it's a revision, I expect you are aware of this. Who is higher authority? Those charged with the governance. So, shall I directly go and ask those charged with the governance? That's what this standard says. They are the higher ups, but nevertheless, they may not have any knowledge of it. Like at a director level guy, you go and ask him why this fan is not working. What he will know? He will not know anything. Now, and can it be repaired or do I have to treat it as a scrap? He is a too big guy. He is dealing with so many things. So he will not know about this. So taking a confirmation from the management is of no use. So coming back to it, from whom should I take this written representation? 2 points you have to remember. That is, who is knowledgeable about it and who has got the authority to give. Putting it in a simple way. To put that, that is what he is explaining. From whom should I take this written representation? Whoever have appropriate responsibility with regard to it. And second one, who is knowledgeable about it. Or you can write the second one first and first one later. Who has a knowledge about it and who has an authority on it. So from them you have to take an written representation. Giving examples, what can come in, and if I give 2-3 examples, you can relate and write it even if similar question comes. Like say in the stores, there is some material which they treated as unused material, non-moving material. Now I want to know, why is it non-moving? Now whom should I ask? Now I wanted to take this basically from a production manager or a stores manager saying, are you going to use this or not? But they are traveling. That is why accounts guy said, don't worry, I will give it in writing. We are also management. I will give it on a letterhead. Now, how the accounts guy knows whether that material will have an alternate use or not? That's why, or similarly, take debtors. Now, whether money is collectible or not, that is the collection team will have an idea. They are the people on the ground interacting with them. This accounts guy is simply sitting in the office. How he will know it? That's where, whenever I am taking representations, to rely on it, I have to take it from the people who are expected to have the knowledge and who are having the authority to give it. So otherwise my written representation is a piece of paper. So it's of no use. That is what he is trying to talk about it. Then comes to this contents. Standard question he is asking. That is, what are the contents of my written representation? It is a letter given, but what are the contents of it? It will contain 3 points in it. First one, confirmation of management responsibility. That is, you take the letter in writing from the management saying, yes, they are responsible for preparing the financials, providing the correct and complete information and all that. And second one, to confirm on certain other matters, like maybe court cases, provision for debtors and all that. And the third one, any deficiencies in internal control. So wherever there are deficiencies in internal control, you take a letter from them. Are they significant or are they not significant? So to cut it short, it's something you can just by heart and close it. And conceptually also it is clear. What are the contents? First, confirmation of management responsibility and to confirm on other matters and deficiencies in internal control. This is what are the contents that are there. Now, one more, the most important point is date and period. So this one, mark it as a category. What is the date you have to take this and what is the period you have to take it? It is a good one, good probability for MCQ also. Now, when I should take this written representation, you should take as near as practicable, but not after the date of audit report. So, indirectly, I need not collect it before my engagement, before starting the engagement, not required. I have to collect it as close as possible to the date of audit report. So that is the date. But whenever I am taking, I must take for the entire financial period. Say, that is, though I am taking in the month of May, but my representation letter should cover from April to March. So it should cover the entire financial period, but I can take it even after the financial period. I need not take within the financial or on the last day of the financial. I can take it even after that. That is, what is the date and period of it. Then exceptions and all are okay. Then one last question. What almost like a C category, not so important, but still you can ask. I have to take management representation. I have taken it now, but I have a doubt on the reliability of it. I don't want to rely on it. But that is, somehow my sixth sense says it is not reliable. So, because I have asked, they have given. Management can give anything. So, whenever there is a doubt as to the written representation, what an auditor should do. So, three things. Evaluate the impact and perform additional audit procedures wherever possible, and if not satisfied, modify the report. That's all. So this final steps are always, this is when I have a doubt on the written representation. Evaluate the impact and see whether any additional procedures can be done. If that is also not possible, modify the report. That's all. So this is, what is this? Your written representation and all from your exam. And probably one more, the last and the final one is, what if the management does not provide the written representation? What is the difference between what we discussed before, that is the doubt, and the topic of this? So here in the earlier one, they have given, but it is not reliable. But in this case, they have not given at all. They are not willing to give at all. It is mandatory for me to collect, but they are not willing to give. So if the management is not willing to give, what should I do? Then I should discuss the matter with the management, why you are not giving, and then I should re-evaluate the integrity of the management, because they are making the statement, but when I am asking them to give it in writing, they are refusing to give. So when they are refusing to give it in writing, then I re-evaluate, then the integrity of the management itself is questionable. I do that and take appropriate action. So maybe modifying the report, whatever you want to take, you take it. So these are the points on it. And finally, when you may go for disclaimer of opinion with regard to representation. So when an auditor will go for disclaimer, two situations. It is logically easy to answer. When the management has refused to provide written representation. In the second case, they have given the representation, but it is doubtful because there is a doubt on the integrity of the management. So in these two cases, I don't want to rely and I can go for disclaimer. I repeat it. When I can go for disclaimer, when they have not at all given me representation. Second one, they have given me representation, but it is doubtful. So I may not be able to rely on it. And because I have my own doubts on the integrity of the management, then in these two cases, I will directly go and give my disclaimer of opinion. So this is written representation topic of it. So these two are two small ones in this. The basically what he is trying to ask you and where you will get confused is, can this written representation be used as an evidence where alternate procedures are possible and alternate procedures are not possible? And with this, mostly it is over. And these two are two small negligible one. SA 260, communicate with those charged with the governance and all this. In this, there is only one in the SA 260, there is a small important amendment here. The amended content he has added. This is a new one. This is the only one you may get it under SA 260. That is communication of, this is important one, and this is the latest change. Under this, there is a, for listed companies, it is applicable for listed companies. If you got your SA 260, particularly this one, you will see that with the heading communication of auditors independence in case of listed entities. Take 3 stars to it, because this is an amended one, so you may not find it in the old way of questions. This is the new one, and it is applicable only for listed entities. That's all. Then what it is all about, communication of it. Who is confirming? Auditor to those charged with the governance. It is applicable only for listed entities. What are the points auditor should confirm here? Compliance by the audit firm, including their network firms, on the ethical requirement. And second one, application of safeguards. Wherever there are threats to independence, how the auditor had applied the safeguards against these threats. And the third one, total fee charged, audit and non-audit related. So this is the only item which is something to be discussed at the marathon. Remaining ones are simple, straight topics and all that, which we can do it. So to sum it up, this communication of independence is required only for listed entities, and auditor had to confirm his independence. So, and in that letter, he will be talking about these three things: compliance of the firm and this networking firm and the ethical requirement, more so with regard to independence, and application of safeguards with regard to the threats to independence, and the total fee charged, audit and non-audit. So, and again, this is applicable only for listed entities. Remaining points and all are very simple points, and in fact, you don't see too much of discussion being given on it. Then in SA 265, it will get over in 5 minutes as a quick revision. Deficiencies are of two types: deficiency and significant deficiency. Now, deficiency would mean internal controls, either they are missing or they are failing to prevent or detect the misstatement. They are there, but they are not effective. So, 2 points. Internal controls are not at all there, missing. The second one, they are there but not effective. They are not able to prevent it. That is what we call it as a deficiency. Then significant deficiency are the ones, that is, it is a deficiency, but which merits the attention of those charged with the governance are called significant deficiencies. So, I repeat, deficiencies are of two types: deficiency and significant deficiency. When I say deficiency, either internal controls are missing or it is there. It is not that it is not there, it is there, but it is of no use. It's not able to prevent. So that is what is the deficiency. Significant deficiency is a deficiency which needs to be reported to those charged with the governance, are the ones which we call it as significant deficiency. Once you learn this, then now you tell me, let me see whether you are familiar. Which one I will communicate with whom? Because that is what is the core content in this. Which one I will communicate with whom? If it is a deficiency, I will communicate with the management. If it is a significant deficiency, I will communicate with those charged with the governance. That's all. So these two tables will take care of the requirements. And from exams, it is, you can say that this standard is a C-rated topic, and not too many questions have been asked on it. So this is what are the ones. And one only additional content he has added in the new material. So between SA 260 and 265, 2 points as a marathon or as a revision are important to be discussed. Communication of independence by the listed companies, which we have discussed. And the second one is, whenever the auditor is communicating the significant deficiencies or deficiencies, what matters to be included? Earlier, there was no structure. They only say communicate. But how should I communicate? Nothing was streamlined. Now they are giving it. Matters to be included. 3 points I have to give. One is description of deficiency. What is this deficiency? Second one, what is the impact of the deficiency? Potential impact. And the third one, in what context I am communicating this? Why am I communicating? So the context of communication. So these three are the points that are to be included in your communication with regard to this essay 265. So this summarizes, because it's a marathon and considering the time, I'm not able to go in detail, but that is what are the major important points out of this one. So with this standards, your chapter 7 also comes to an end. Now what we do is go for a quick break of this. Then in the next session, we will go for easy but important topics. So that we will cover, so that some number also we can cover and close it. Just go for a quick break of 5 minutes and then come back for it. We'll continue further. Okay. So quickly start off with this, and the topics that we are discussing, that we are going to discuss, are the simple ones. So I will take it little fast because mostly you all are comfortable with the small chapters, but I'll just refresh you from what is important from the examination perspective. Now, essay 230, audit documentation, and this is also of late, almost like every attempt, there will be one question. So very rarely the questions are missing because it's ICAI. There will be a surprise element, but otherwise you will have one mandatory question. Simple chapter, small content, but still you can score about 5-6. That's how you should target on the small chapters. They keep helping you, adding 5, 10, 5, 10, 5, 10 and all. Without knowing yourself, you are already close to it. But if you attack the tougher concepts, I am repeating what I told you. That is where your hard work may not be really come to handy, because ICAI can really get into the details and trouble. But these are the topics where boundaries are clear. He is not going too much into practicals. It is going to be very, very convenient. Now, this one, since you will be mostly comfortable, I will go straight to it. What do you mean by documentation? Now, documentation, when I say audit documentation, this is also called audit working papers or audit work papers. Now, it includes 3 things: audit procedures performed, audit evidence that I've gathered, and audit conclusions that I've reached. So all this is what do we call as a documentation. So this chart will summarize procedures performed, evidence obtained, and conclusions reached. Then, is it mandatory or optional for the auditor to keep it? Yes, it is mandatory for the auditor to keep this documentation. Then, what are the form, content, and extent of audit documentation? What are the factors that would, it's a B type of it, but he is asking, that is, how much documentation I should gather. It would depend on the size and complexity of the entity, and the type of audit procedures that you have performed, and the risk of material misstatement that you have, and the types of audit evidence and the importance of it, and the exceptions identified. So, and the methods and tools that you have used, and need for it on the basis. So that is what you will be using it. Then I will just directly go to the important and where you may not be able to score it and all that. Let's say, when should I prepare this documentation? That is, should I do it during the audit or should I do it after the audit? But before that, first I have to talk about this time limit and then come to it. Now, these are the simple MCQs and which you will be comfortable in answering. What is the time limit within which I have to prepare my documentation? 60 days. And 60 days from when? 60 days from the date of audit report. That is, what the ICAI is saying is, first start the audit. Keep gathering it, because audit documentation, I have to take all the documents, file it in an order, index it properly. So all that little clerical work is there, administrative work. That will take time. That's why taking that print and punching the hole and neatly doing it and writing all this, it takes time. That's why they are saying first finish the client, because we have so much of pressure from all the clients, and then slowly you are given 2 months time, sit and prepare all this, take new printout, punch it properly, paste it properly, index it properly, write your notes. So maximum time limit that I am having here is 60 days from the date of audit report. So that is where a question can come. Then when the ICAI is okay, if I do this, build up this documentation after the audit, then should I always do that after the audit? That's why first you have to read that and come here. So what ICAI still says is, though we are giving 2 months time for you to prepare the documentation after the audit report, but it is always effective if you can do it during the audit. So, and if you do it after the audit, it is less effective. He's asking a small question, MCQ one-liner and all. When audit documentation will become effective, though I have got technically time of 60 days after the date of audit report, but if I can do it during the audit, nothing like that. That will become more effective. That is what this is trying to summarize. Then another point, the timelines I will talk about it. And what is the retention period? That is how long I have to retain my documentation. The documentation had to be retained for 7 years. So, and this 7 years, either from the date of audit report or date of group audit report, whichever is later. That is what is this one. Then there is one more. Yeah. I'll put both here as a summary of timelines because this chart will give you the both comfort. And mind you, questions also he is asking in the simple only. It looks simple, but because of its important, even if it is simple, he is asking questions. I'll repeat it. What are the, so there are two timelines that we talked. For one is for assembly of audit file, and second one is retention of audit file. And for assembly of audit file, 60 days is the time, and that is the maximum. And for retention, that is how long this assembled audit file I have to retain. I have to keep it for 7 years. So this 7 years is the minimum period which I have to retain it. So one is the assembly and the second one is the retention period. Then comes the question, say, then what can I do in this retention period? 60 days is for assembly and 7 years for retention. But in the meantime, what I am not supposed to do, I'm not supposed, no deletions are permitted. So that is once 60 days are over, you should have kept all your box files aside. Then don't touch it and keep it for 7 years. But can I keep on making amendments till the 7 years? No, you cannot. No additions are permitted, no deletions are permitted within that period and all that. Then during that 60 days, when I say during 60 days, what 60 days I'm talking about? From and what? After the date of audit report and the maximum time given for documentation. Within that period, what is allowed, what is not allowed? What is allowed is making changes of administrative. Then what is not allowed? Gathering new evidence. It's not that you sign the audit report and then start gathering audit evidence. That is not permitted. So gathering new evidence is not permitted, but you can make administrative changes. So removing, delete, duplicate documents and all this kind of stuff, you can do that. That is what is this important points with regard to this retention and all this. Then, so first I will touch one more time on this timelines and then I will go to the this one. Now you tell me, what do I mean by documentation? 3 points you have to remember. That is audit procedures performed, evidence obtained and conclusions reached. Now you tell me, what is the time for assembling audit file? 60 days. And is it minimum or maximum? Maximum. And what is the time given for retention? 7 years. Is it minimum or maximum? Minimum 7 years. So 7 years from what date? Date of audit report or date of group audit report, whichever is later. That is how this logic works. Then in that 60 days, that is completion of audit and my documentation time, what is permitted, what is not permitted? Administrative changes are permitted, but gathering new evidence is not permitted within that timelines. So that is what is broadly the points and all. But when the ICAI is giving 60 days, then can I do this can I start really doing this after completing the audit? That's why they say that though you have been given time, but theoretically and practically, it will be more effective if you can do it during the audit. So it is recommended to do it during the audit because it is going to be more effective. So you can even do that after the audit, but it is less effective because you have already signed. Even if you realize some, then you may not be able to do it. Then as an MCQ, he is asking between the difference between audit documentation and audit file. Now let me see how much you remember. When I say audit documentation, what are the 3 words I am talking? Procedures performed, evidence obtained, conclusions reached. So that is what is my audit documentation. When I talk about audit file, it is about the folder. So this word is important because he is asking questions using this word. What do you call this which contains the documentation and all that? So when you use the word this folder, then you are referring to audit file. So audit file is an output documentation is a process. So that is what it is. And in the whatever you gather all that, and if you put it into one folder, whether electronic folder or a physical folder like a file, it becomes my audit file. So that is what it is, this one. In that context, what comprises what? So my audit file will comprise all the audit documentation that I've gathered. So audit documentation is gathering of all that information and all that. That if I put them in one place, in one folder, it becomes an audit file. So audit file will comprise of all audit documentation. That is what is the point in this. So before I go to this summary or completion memorandum and all, now one last time, repeat the timelines. What are the two timelines that you have? 60 days and 7 years. What is 60 days is for? Assembly. And what is 7 years is for? Retention. Which is minimum, which is maximum? 60 days is maximum and 7 years is the minimum. Now, what is permitted or what is not permitted within that 60 days? Administrative ones are permitted, but gathering new evidence is not permitted within that period and all that. Now, then actually, whenever you read, you also remember to read this point. That is, what need not be included in the documentation, because whatever the procedures auditor is performing, he must keep it. But certain documents, though it is a part of my evidence, but I need not collect in the documentation. Which are the ones? Superseded drafts. That is, where first version and second version. So then do I need to keep my first version and all? Not required. Superseded. Like first you prepared a depreciation table. Imagine you prepared a file. You have taken the print. But when you took it to the manager, he said, no, this is wrong. This percentage is different. Then again you came and you reworked and you have taken second print. Now, do I need to keep both the version 1 and version 2? Not required, because version 2 is your superseded. So version 1 is your superseded document, version 2 is the latest document. So old ones you discard, otherwise you yourself will get confused. What was the original, what was the final, all that. That's why superseded documents you can remove it, and any incomplete or preliminary thinking, what you prepare at the beginning and all that, not required. Collect only what is, keep only relevant ones. And previous copies of documents corrected for typographical or other errors. If there is a small typograph error you have corrected and all that, then don't need to change the previous copies and all that. Just keep the updated ones. And duplicates. So there's no point in keeping the duplicate documents. So keep only one copy of it. That's all. So this is just you try to remember and do that. Then one additional content. Why I am giving importance to this is an additional content. You don't see too many questions being asked on this. That is the completion memorandum. So now what it says is, once my audit is over, this is an international practice basically, and which is made mandatory. Earlier also it was there, but only few auditors, professional auditors used to do it. But now it is made mandatory for every auditor to do it. That is, at the end of the audit, the auditor had to prepare something called a summary. So that is, see, my audit will go on for 2 months, and maybe my 10-member audit team would have done various things. I've got 100 queries, some got resolved, some are outstanding. So at the end of it, if I have to explain, say NFRA is calling me, they're asking, how did you do the audit? Now, I don't remember who are all the team members came. I don't remember what doubts I got it. That's why what they say is, once the audit is over, then prepare a summary. And in that summary, what I will retain what are the significant matters identified and how they were addressed. So because the problem is, what will happen practically is, suddenly you will get a notice from income tax saying we are reviewing some 2022-23 files, and in that there are discrepancies in related parties. Come to our office and explain how did you get it. Now, who will remember 22-23 figures? I am handling multiple clients, multiple years. Who will remember? And the team who did it also would have gone. Maybe earlier we had one senior article, he used to do it. At least if he's there, I can talk to him. Now, do you remember any queries? We both said. But he already left, completed article, joined somewhere. He also forgot. So this is happening. Auditors are not able to recollect. So that is why they are saying, once you complete your audit, prepare this completion memorandum, or it is also called summary memorandum or completion memorandum. And when I should prepare this, I should prepare this at the end of the audit, and that is after the audit, not during the audit. Because if I do it when I'm doing it, I can't complete. Once you complete it, then prepare a summary notes. And what it should contain? Simple. Significant matters noticed and how it addressed. And what are that significant matters? Areas of risk of material misstatement, where there was a risk of misstatement was high, and areas with significant difficulty in handling that, gathering the evidence and all that, or findings which may require modification, important observations. These 3 points must be there in your documentation, completion summary. But this is prepared by the auditor at the end of the audit, so not during the audit. That is why just he is asking when to prepare that summary. Is it during the audit or end of the audit? Not during the audit. It is prepared after the audit. So, but when he says after the audit, how many days within which I have to complete? Again, since it is a part of documentation, again you have to go back to the documentation. So for documentation, assembly of documentation, how many days are given? 60 days. So that is what it is. So on a combining this from a concept basis, you can ask, what is the time limit for preparing completion document? It is a part of documentation. So same documentation timelines would apply. Within 60 days, you have to complete and do it. So this and the other topic, there is a slight confusion. Whenever you are preparing documentation during the audit or end of the audit, now you tell me. When the documentation will be more effective? During the audit. But when should I prepare my summary completion memorandum? After the audit. So there is a slight deviation. So when you read the text, you will not get sensitized, but make a note, or as I said, if time is not there, you can just take it at a later point of time. Then similarly, touching another core important point, sharing of working papers. That is the documentation that I have built up, with whom I can share. So with third parties, the rules are different. Probabilities with the client or the principal auditor. With the third parties, that is one client data, me giving it to a third party is not permitted, except with the approval of the client and when the law requires. That's all. So either the law requires it or with the approval of the client. Otherwise, I'm not supposed to share it with the third parties. But the client whose data I am having, he himself is asking, because maybe his data got destroyed in the fire accident, or he misplaced it or something like that. Now client himself is asking me, give me a copy of it. Can I give it to the client? It is the discretion of the auditor. Not mandatory that I have to give it. It is the discretion of the auditor. Then can I give it to the principal auditor? So principal auditor is branch auditor and principal auditor. In this, there is I suggest you be good with this diagram, because there is a scope for he asking you what are the rights of that. I will ask you. Before this, there are 2 more points which you are comfortable, so I am taking little. Whose property are the documentation? Auditor's property. And whose custody this documentation will be? Auditor's custody, because he is the owner of it. So in that background, one question can come. If there is a branch audit and the principal audit, the branch audit working papers are whose property? Because in branch audit, what will happen? You are a branch auditor. You finish your branch. He is a branch auditor. He will finish his branch. Both of you give me the report. Sitting at head office, I will do the head office. I will take your report. I will prepare consolidation. That is what practically happens. So whatever you did, that is your property. Whatever I did, that is his property. But me, now I am signing based on your reports. So I am not doing what you are already did it. So I am depending on you. So now your working papers, will it become your property, or you will have to give it to me? That is the question that he is asking. So what about the rights of the principal auditor on the branch auditor working paper? So it's a simple one. Can I request, that is as a principal auditor, can I ask you, because based on your report I am reporting, so give me a copy of what you have done. Can I request? The answer is yes. But can I demand? I don't have a right to demand. So this point, because of the recent cases and all that, he is asking you in the question, like here you can see it, this 2021 question and all that. Otherwise, you read all other points and you miss out on this. The working papers of the branch auditor are also the property of the principal auditor. No. So, the branch working papers are the property of the branch auditor, and at his discretion he can give it to the principal auditor, he may not give it. So it is up to him, that's all. Then what is the right of principal auditor? You want to request? Yes. You want to demand? You don't have the right to demand, because to share the branch audit working papers, because it is the property of the branch auditor, it is his discretion. That is what we are trying to say. It is the discretion of the branch auditor to give it to the principal auditor or to the client. So actually these topics are good. We can discuss much in detail, but since we don't have time, let's restrict only to this core concepts of this documentation. Then let's go back to say chapter 11, because this is also very simple and simple, 6-7 marks. That's why when students will audit paper, they don't know how to plan for it. They go behind multiple times or repeat the same point. They run behind the important topics and keep getting hit multiple times. Choose the small topics, your success will become guaranteed. Now, this also very simple topic. Mostly you are aware of it. So I will take liberty and I'll move little fast in this. What do I mean by ethics? So when I say ethics, there are 2 points. It's all about the moral principles and it is about the state of mind. Meaning, what is ethics for one person may not be ethics for the another person. Like you say, you just having non-veg. Now, for vegetarians, you killing an animal and eating it, it's not ethical. It also has life to run. But if you're a non-vegetarian, you say that that's a survival. That's a rule of the society and all that. You convince yourself. That's how ethics is. It's a person driven. So it's all about the moral principles and it is a state of mind. Then what are the types of ethics? This is important. So there are 2 types of ethics. One is a principle based and second one is a rule based. And rule based, I'm talking about the second one first. Rule based, there is a rule you are following. That's all. Like when they say that you have to wear seat belt when you're driving, you wear seat belt. If you have to wear helmet and drive, you wear helmet. So not that you are influenced by that, because there is a rule you follow. That is what we call rule-based ethics. So like you should not wear slippers and enter into your temple. Now that's a rule. Now somebody may question what will happen, and I'm a diabetic patient. Without that I can't walk and all that. That's why. But there is a rule. They won't allow you. That's all. So it is a rule-based, and rule-based ethics are mostly rigid because it's a rule you have to follow. You like it or you don't like. Like some of the temples you go, you have to wear a proper dress. That's all. There is a dress code and you have to maintain it. Now, what will happen if I go in jeans? Will the God get angry and all that? Nobody will listen to you. It's a rule you have to follow. That's how the rule-based ethics are very rigid. You must follow it. Whereas the principle-based, it is about the judgment. It is about the spirit of the auditor. So it is about the spirit of ethics. He himself wanted to do it. Like some auditors, they won't accept the clients who are not maintaining proper books of accounts, like who are into real estate and these kind of businesses where you have to bribe and you will not be able to record. They don't want to do it. But it's not a rule based. It's a principle based. So that way, principle based ethics, it requires a lot of skill and expertise to decide it. Whereas the rule based ethics, no skill is required. It's a rule, you have to follow it. That is the difference between principle based ethics and rule based ethics. Then let's move on to it. Then another very important question, you can mark it with A category or double A category, whatever you can mark, is what are the fundamental principles of professional ethics. So this fundamental professional ethics are integrity. Like see, so many questions repeatedly being asked for 4 marks, 2 marks, 3 marks, all types of it. Question is simple and straightforward. What are the fundamental principles of professional ethics? So one is integrity. Integrity is the straightforwardness and being honest into it. That is, as a professional, you must be straightforward and honest. Second one is objectivity, unbiased. One words, if you take, you can later on elaborate and all that. When you say objectivity, unbiased, there is no influence. You go unbiasedly, you take all decisions. Third one, professional competence and due care, where you apply your knowledge and skill based on that. Then confidentiality. So confidentiality is not to disclose to a third party and all that. Then professional behavior. That is the behavior, what you are doing, it shouldn't impair the integrity or reputation of the profession. So that is your professional behavior must be upright. And then independence of auditor. So till here it is. So if we talk about this professional ethics, integrity, straightforwardness, objectivity, unbiased, and professional competence and due care, knowledge and skill, and confidentiality, non-disclosure of the client's related data, and then professional behavior. So good reputation. And another important question he is asking is independence. Now, if you look at the chart, it's self-explanatory. Now, whenever I am saying independence, my independence is of two types: independence of mind and independence in appearance. And when I say independence of mind, without being affected by influences, that is within. And independence in appearance, it is not within, it is for the sake of third people, so third parties. So that's where a police commissioner taking a picture with a criminal. Now, maybe police officer is a tough guy, but if he has got pictures, what he has taken with the criminals, third parties will believe that you are a culprit. So that's how auditor is not only be independent, but he must appear to be independent. In that background, independence is of two types: independence of mind and independence in appearance. Now, I want you to repeat, because since I'm going little too fast, now I'll hold back. When I say ethics, what are the two subpoints we should, because he is asking define ethics and then extended question. So how do I define ethics? 2 points: moral principles and state of mind. Now let me see whether you remember. What are my two types of ethics? Principle based and rule based. Which is more rigid? Rule based is more rigid. And where do I need my skills and spirits? Principle based I need. Then there's 5 professional fundamental principles you remember. Now, independence is of two types. What are the two types of independence? Independence of mind and independence in appearance. One word for independence of mind: unbiased. So, and one word for independence in appearance: third party. So, that is how you can talk about this. Otherwise, you got multiple questions being asked on that one. Then, threats. So there are threats to independence. That is why auditors are not able to do proper job, because why their independence is getting compromised. There are various threats to the independence. If you elaborate: self-interest threat, self-review threat, advocacy threat, familiarity threat, and intimidation threat. All these are important, and this topic is almost a category topic. You got short answer questions, long answer questions, MCQs in multiple ways he is asking, because this is a new content for you. Earlier it was there in the final. Now he has brought it and dumped it at inter. So it is a new content. Don't get fooled by not too many questions in the past. The topic itself was not there. So it is the latest topic in the new syllabus. Now let us go back. What are the 5 threats? Self-interest, self-review, advocacy, familiarity, and intimidation. Now, when I say self-interest, it's all about the financial interest. One word for it. And self-review, I am reviewing my own work, previous opinion. And advocacy, the word comes from like advocate. It is promoting an opinion. So, and then familiarity, relationship, continuing auditor, continuing with long period and all that, familiarity. Intimidation, threat. What kind of threat? Threat can be of 3 types: threat of replacement, and threat of reduction in the audit fees, or threat of litigation. So these are the intimidation threats that you can have. Now in the self-interest threat, is asking specific questions. So I'm going a little deep into it. Now before I continue, now you tell me, what are the 2 types of independence? Just one step backwards and learning independence first. What are the 2 types of independence? Independence of mind, independence in appearing. One word for independence of mind: unbiased. So unbiased or without influence. And this one, appearance, third parties. Now, what are the threats? 5 threats of my independence: self-interest, self-review, advocacy, familiarity, and intimidation. Now we will learn 3 little details into it, because he is asking you specifically. When I say self-interest, it can be a financial interest. So either direct financial interest, or some loan or guarantee is taken, or the most important, wherever I have taken 3 stars to it, remember that. Otherwise, logically you can connect the remaining ones when I take loan with threat and all that. But this one you may miss it. undue dependence on a client fees. Meaning, from one client, there is a professional ethics code of conduct, which you learn it at the final level. That is, from a single client or a group, my revenue should not be more than 40%. That is, I should not depend on a single client for the survival of my office. Then what will happen? If that client is lost, my firm will flat. So then in order to retain that client, I may compromise and I may start listening to that client. That's why there shouldn't be any undue dependence on the client's audit fees. So indirectly, the rule is more than 40% of my total fees shouldn't come from a single client. If it is coming from a single client, I am depending too much on a single client, whereby I cannot afford to be straightforward and afford to miss the client. That is what it is. And then the another important one is contingent fees. So what do you mean by contingent fees? What do you mean by contingent? May happen or may not happen. Similarly, contingent fees is, to cut short in the interest of time, percentage. So charging the audit fee based on the percentage, like how the valuers will take their fees for valuation of a building. They charge 2% of it. So likewise, can an auditor also link his audit fees based on the percentage of profit or based on the percentage of revenue? The answer is no. So he cannot take it. So contingent fee. Then what will happen? If my audit fee is linked to the profit, then more than the client, I want him to have more profit so that I get more audit revenue. So that's why contingent fees is not permitted. So that is what is this contingencies. And one more he is asking in the exam, maybe with 1 star, is potential employment with the client. That is, particularly when you are a beginner, not for people like us who are already spent so many hours in the practice, but when you are in the beginning of your practice and where you are struggling to get clients and make some good money and all, that is where a client says, when you're gone for an audit, he says, why do you struggle? Come and join me as a CFO, I will give you money. So I will give you some 2 lakh per month or 3 lakh per month. Then you get influenced. Then that year, because you are looking for a potential employment, future employment with him, then you want to please them. You cannot afford to dissatisfy the client. So you compromise. That is what are all these examples. Self-review, where you yourself have done the work and you are reviewing it. That is why we have section 144 of Companies Act, prohibited services and all, non-audit services. And advocacy threat. Important, take A star. He is asking not because it is very complicated and all, he is asking because you will not be familiar. Advocacy threat is where it is a kind of a threat where you start promoting certain opinion to such a stage where you cannot come back. Say, many times what will happen, even in our arguments, you take a stand, but you know that you are wrong. But having taken a stand, you continue to support it. Inside you know that you are wrong. So that feel is what is called advocacy threat. Like for example, I have received an income tax notice. Why in the sense my client has received an income tax notice. Now, I know that the client is wrong and he didn't deduct the TDS properly. He will have to pay the taxes. But when he got a notice and he come to me as a tax professional, then what I have to do? I can't simply tell him that, no, what you did is wrong. Now go and pay it. Then he will go to another CA. So now as a practitioner, that's my business. That is a different business. Then what do? I will try to look around the case laws and I try to look around some small scope whereby I can hang on to the client. So when I am acting as a tax consultant for the client and in a legal debate, then I am going and arguing with the authority that my client is at no wrong. But as an auditor, I know that my client is wrong. So I am playing dual role. So that is where, suppose imagine in this case, as an auditor, if I give an adverse report, no, client is wrong. And again, I go to the income tax officer arguing my client is not correct. Then he will open that audit report and show it to me. You yourself are unhappy. You yourself had issued an adverse report. Then why are you? That's why in the advocacy threat, if you have promoted any point to such an extent whereby you cannot come back, then that is not warranted. That is what is advocacy threats and all this. Then familiarity threat. This is okay. You can easily read and understand where there is a auditor's forms relationship with the client in such a way where it endangers the independence itself. So, example, close relative of audit team working in the senior position of it. Like when my son is a director over there, or when my father is a director over there. Now, how can I report about the client? So because the management is familiar. When my father is the director, then I feel it is my company. So that kind of stuff. And when former partner of the audit firm being a director now, he was earlier my partner, but he resigned me and joined there as a director. But we still carry good friendship. Then I cannot, because since my friend is a director, my earlier partner, I can't give a negative report. So those kind of things. And basically from exam perspective, fourth point is important. He is asking in MCQs. Accepting significant gifts or hospitality from the client will come under familiarity threat. That is, my client is running resorts. Now, I want to have, I am having a function. Now, if my client is saying, take my resort, now why you pay for it and all that? You are my auditor, take it for 2 days, doesn't matter. Then if I take any such kind of help from the clients, then it will become my turn to do that favor. So, which I should not do. That's why accepting significant gifts or hospitalities from the client comes under familiarity threat to the management. And finally, the intimidation. Intimidation, I gave you here the picture itself. There are 3 types of threats: threat of replacement, threat of reduction in audit fees, or threat of litigation. This is more easy. So rather than reading that theory and you trying to make a summary, this is more easy. So these are the various threats. And in the exam, you can ask you an overall question, or you can ask you an in detailed question on this threats and all that. Then we go to little in detail about it. What should I do if there is a threat of independence? If there is a threat of independence, then apply the safeguards. Now, where are the safeguards? Companies Act has given certain safeguards, ICAI has given certain safeguards, or you yourself can establish certain safeguards. If it is possible, implement them and reduce your risk to the acceptable level. If no such safeguards can be applied, then do not accept the engagement. So in this entire chart, this piece, that is why I marked it, this one can come as a short question for you. What an auditor should do, that there is a threat to independence, but he is not in a position to apply safeguards. So if there is a threat to independence, and if you are not in a position to apply safeguards, then better don't accept that engagement. So this last point is the reason why you study this table and all that. Then comes the small word, professional skepticism, on and off. Not very frequently asked, but it is a traditional one as well. When you say professional skepticism, it's an attitude. So it refers to an attitude of 3 things: questioning mind, being alert to possible misstatement, and critical assessment of audit evidence. So, and when an auditor is supposed to exhibit this skepticism throughout the audit, so, and he is not supposed to drop his skepticism, he is supposed to maintain throughout the audit. So what is skepticism can come as a question for you. And then I'm just considering the importance of time that we have. I'm going little fast. Now, this audit engagement. So again, he has come to this. Now, whenever I say audit engagement, we already talked about this morning itself. Now, engagement assignments. Now, when I say audit engagement, 2 parties are involved, auditor and the client. Who will issue this engagement letter to whom? Whether the auditor will issue to the client or client will issue to the auditor. Auditor is issuing to this client. Then what are the contents of this one, and what are the preconditions? So if we talk about the contents of engagement letter, it's a small routine, simple standard. So I'm going little fast, and whichever is important for you, there I will hang on. And my audit engagement terms, what I should have in my letter, I should have the objectives and scope, and then responsibilities of auditor, responsibilities of the management, and then templates of both financial framework and the audit report. So that's easy to remember. First is objectives and scope. Then the second and third are responsibilities of auditor and the management. Third are the formats. Format of financial, format of audit report. That is what will be there in this management, engagement letter. Then there is a concept, this I will hold back, and preconditions for an audit. Nowadays he is asking, it's a new content, that is, for ICAI Inter, it's a new content. He has been included in the revised standard, and for you only in the new syllabus. 3 years ago this was not there. So I will explain it, kindly listen to it. what are preconditions for an audit is, because once you understand it, then later on you can answer any question around that. Say, what are preconditions for an audit? Whenever a client is approaching me for accepting an audit, like say one client comes and says, we want you to be auditor of our company. Then before accepting that client, I have to see whether preconditions are there for it. That is, for example, FRF is acceptable. First I have to talk to him. I will accept that audit, but tell me, how are you preparing your financials? Are you preparing in a Schedule 3? So whichever the law that applies. So is that FRF? FRF is a template of financials, to put it in a simple way. So are you preparing the financials in that template which is acceptable? If that is yes, then I will do it. Suppose he says, no, I don't want this. My head office has given a format. I will prepare it in that format. I want you to certify. I'll say, then I'll not do it. So that way, first, the FRF in which he is preparing, that should be acceptable. Second one, I should discuss with the client on the basis for conducting the audit. That is, how am I going to conduct the audit? So management must agree to its responsibilities for preparing the financials, internal controls, and providing the auditor access to all information. And not only that, what they have, even if I ask any additional information, they must provide it to me, and they must give me unrestricted access to the personnel, that is the staff, so that I can go and discuss what I want. So unless they give me all this, I will not even accept it. That is what is this preconditions. Many times what will happen, I'll just give an example so that you understand. Say one bookshop, like say any Universal or anything like that, they came and asked me whether I will be the auditor of this. I said, when a new client coming, I said, yes, I will accept. Now, he has given me appointment letter, he has filed ADT1, everything is over. Now, it is the audit time. Now, 31st March I go, I say that I want to verify the stock. Now, so many book stocks, he says that when can you verify? Because he'll continuously keep, like you take any of these book nearby, people keep coming and buying, and people keep coming and taking away, he's replacing. So it's a keep on changing. Like you imagine any supermarket. Now I accepted as an auditor. Now on 31st March, I say that, no, I want to take the stock take, shut down your shop. Now, he may not be willing to do it. He says, one day, I make almost like 30 to 40 lakh business. Now, for the sake of audit, I can't afford to close the shop. Not only that, my customers will go away. So, he is not accepting. Then I say that, no, without this, I can't give it. Then I say, I will give a disclaimer of opinion. You start fighting with the client. That is why what the standard suggests is, first, beforehand itself, before you accept the audit, new audit or even the old audit, before you convey your continuation, confirm with them whether these preconditions are acceptable. That is, FRF must be acceptable, and the management must agree to do all this. If you see any resistance, don't even accept this engagement. That is, what are the preconditions for an audit and all that. Then, whichever is important, I will go to it. Then a simple question can come. I have written, now I am marking, maybe from the YouTube video and all that, you can take a screenshot and remember. This is asking nowadays, what are preconditions and what should I do if preconditions are not present? So if preconditions are not present, discuss the matter with the management, and if it is not resolved, then do not accept the engagement. It is as simple as that. So this stand is a new stand and a new content. So be ready with this. And you can expect certain questions on the precondition. Only 2 tables. What are preconditions and what should you do? What is to be done if they are not present? These 2, you have to do that. Then I will go to the important topic of it. Engagement letters. Now, is it optional to issue? First of all, you tell me, who is issuing this engagement letter to whom? Auditor to the client. Then comes the question, is it mandatory or optional? That would depend, is it initial engagement or a recurring engagement? If it is an initial engagement, it is mandatory. But if it is a recurring engagement, this is what, it's an old question, very traditional question, but on and off is repeating. So the probability in a new dynamics, little low, but still old, it was a very important one. So do I have to issue this every year? That is what is this recurring engagement. They say auditor will decide. That is not mandatory. If the auditor believes based on these considerations, he will issue. Otherwise, he will not issue. What are the considerations? If he believes that there was a misunderstanding of the objectives or scope, then he will revise them and he will talk to the client and he will issue new engagement letter. Or if there is a revision of terms, increase in the scope or increase in the audit fees and all that, he will do that. Or whenever there is a change in the senior management, ownership, nature or size, or legal or regulatory requirements, or FRF, or that is a template of financials, or reporting, then again auditor will issue a fresh engagement letter. So to conclude, it is mandatory in the case of initial engagement, but is it necessary for recurring engagement? It would depend upon whether there is a change or there is a misunderstanding. Then only he will issue. Otherwise, there is no need for auditor to issue it. So this complete your discussion on SA 210, and then the final, this also he has added SQC 1 and SA 220 based on the past. He's not asking two lengthy questions too frequently, luckily for you, because these are two additions he has given. So I will give you the summary of it. As a student, mostly everyone will go for an skip of it because it's difficult to digest, but understand the broad structure instead of leaving it. Both the ones, why we are comparing is, both the standards talk about the quality, but where this quality, the common point is quality. Both the standards talk about quality, but SQC1 talks about quality of engagements that you are having, all engagements, whereas SA 220 talks about only audit engagements. That's all. So that is where this SQC1 is applicable to the entire firm, because that talk, whatever they want you to do, it is applicable for all kinds of engagements, whether it is an audit, it is a review, it is an assurance, or it is a related service. SQC1 is applicable. That is why we say it is applicable to entire firm itself. Whereas SA 220, it is a engagement driven. So it is applicable only to audit engagements. So that's all. So, and only particular audit engagement. Otherwise, it is not applicable. And in SQC1, thus, I will just keep this screenshot and leave it. That is, very rarely you may get a full length question. Mostly you will be getting one small question. That is, what are the elements of this SQC1? Because in the material it is very long and very difficult for you to condense and get control of it. So that is where this chat will help you. As I said, maybe if not here in the YouTube and all that, you can just take screenshot and revise. It will help you for a quick revision of it. So what are all the various elements that are there? First is the leadership responsibilities. So for the overall one, and then ethical requirements, particularly annual confirmations from teams and all that, they are independent and all had to be obtained, and partner also have to confirm. So that talks about it. And acceptance and continuation of client relationship, that we will discuss separately. Human resources, he is asking questions. I can't say he is not asking, but to be honest, it is a little tight and it requires long discussion. Now that we don't have time, I am not able to get to the roots of it, but he is asking. That is, with regard to your human resource, that is human HR of CA office, you must have all these policies and procedures with regard to recruitment, and with regard to compensation, and with regard to training, and with regard to career development. And similarly, engagement performance. Whenever he is doing it, auditor should keep these points in mind. And whenever he is monitoring, then auditor should see the quality controls with regard to relevance of that activities and adequacy of that activities, etc. So among this, and to give a brief one about all the responsibility of it, SQC1 and SA 220. Now I'll just stop for a while and go. Which one is applicable for the entire firm? SQC1 is applicable to the entire firm, but that is whatever talked about in SQC1, you are supposed to follow that for all types of engagement. Whereas whatever said in SA 220, that is applicable only for audit engagement. So therefore, who is responsible for ensuring SQC1 and who is responsible for ensuring SA 220? SA 220 is an engagement driven, so that whoever is the partner handling it, he will have to maintain it. So therefore, it is the engagement partner whose responsibility it is to comply with SA 220. Whereas when it comes to SQC1, since it is applicable for the overall firm, it is the leadership. That is the top level people, either CEO or managing director, managing partner and all that. They would become responsible for maintaining this SQC1. So two things he will ask you. SQC1, whom does it apply? SA220, whom does it apply? SA220 is applicable to all engagements, so including audit engagements. And SA220 is applicable only to audit engagements. So, whereas SQC1 to all including audit. So, what did you understand? Which one is a bigger one? SQC1 is a bigger one. So it is applicable not only to the audit but also for the others. Then whatever he said, monitor and all this, HR policies and all, who will have to, whose responsibility it is to comply? If it is SQC1, it is the leadership of the firm. So either CEO or the managing partner and all that. But if it is engagement SA220, it is the engagement partner to comply with all the engagements of it. That's all. So these three tables, this is very long. Given a time, I would have happily elaborated all this. But instead of this, we will try to cover one more chapter so that at least the benefit of this half an hour we can take much better in this other chapter. So, but screen, it is like a self-reading. You can relate it to it. So, but from MCQs, again I am repeating, whom does, which is a bigger one and which is a smaller one? SA220 is a smaller one. So, and both are talking about quality, but this is quality at audit engagements alone and it is engagement driven. Whereas SQC1, it is at the firm's level. So, that is the difference of these points. Then, quickly, I will take 1 second. Yeah, chapter 2. Just open chapter 2 because this is also standalone chapter and he is asking questions out of this as well. It's a simple one. We will try to cover it in 15-20 minutes and then close the class. Here there are 3 words, simple one, and there are standard routine questions which are coming out of this. Here there are 3 words, audit strategy, audit plan and audit program. So in this, first what you will prepare is an audit strategy and that audit strategy will result in audit plan and more detailed one, and based on that audit plan you will be preparing audit program. So out of these 3, first you will set your strategy. That strategy will result in audit plan which is more detailed, and based on that audit plan you prepare audit program which is far more in detail. This is the relation of it. Now the question, simple question he is asking is, whose responsibility it is to prepare all this? Is it the management or is it the auditor? Auditor. So one common question and one simple question he is asking is, it is the prerogative. It's a true or false question. Like he is asking, it is the prerogative of the management, he says. No, it is the prerogative of the auditor. Now, between strategy and the plan, which one will be more in detail? Between strategy and the plan, which one will be more in detail? Plan will be more in detail. So, this is that question he is asking. Now, whenever you talk about audit plan, there is an important question. I touch on the important concepts of it. Most probably you can relate and most of the students will read this chapter. So audit planning, we say audit planning is continuous. Now why do you say audit planning is continuous? He is asking, like say like this, multiple questions. Planning is a discrete phase of audit and all that. So let's come back. This chart is the most important one from your questions perspective of it. So this audit planning is, it is not a discrete phase but a continual and iterative process. So that is, it is not a discrete phase. It is not a separate phase of it. It is a part and parcel of that entire audit itself. So that is what he is trying to say. But why do we say it is continual and iterative? Your planning will begin shortly after the completion of the previous audit and it will continue until the completion of the current audit engagement. So, and once the current audit engagement completes, again, your plan for the next audit will start. So, therefore, this planning activity is not a separate activity. It is a part and parcel of the audit. And then is it continual? The answer is yes, it is continual. Is it repetitive? Yes, it is repetitive, because we keep continuing it, and when it begins and when it continues, that is why it is called as a continuous iterative activity. Then if you look at it, what is the structure of this elements of planning? This elements of planning will include preliminary engagement activities and planning activities. So I just hold a minute back here and try to give you little more clarity. In this chapter, we have only three words: strategy, plan, and your program. But before I prepare my strategy, I perform something called preliminary engagement activities. That is, even to form a strategy, I need certain basic elements. That is why you perform your preliminary engagement activities. Then this preliminary engagement activities, to give a brief about it so that you don't have to read the lengthy one. What are all preliminary engagement activities? This preliminary engagement activities, what matters will be considered here? Continuation of client relationship. That is, should I continue with this client? Is it safe to continue with this client? That is what you will discuss, and you will consider any change in the ethical requirements, because last year you are independent, but any changes have happened. Maybe one of your family members got married to the clients and all that, or your investment have gone up more than your relatives' investment had gone up more than 1 lakh. Are there any such deviations? You try to recheck, and understanding of the terms of engagement. So is this proper? So these are called preliminary engagement activities, and all this is what the auditor would perform it. And based on your initial audit, preliminary audit engagement, then you prepare your planning activities. So in the planning activities, first is your strategy. And as an MCQ, just to go little slow here, what do you mean by strategy? These words are important. So, because in the question you will see what will decide the scope, timing, and direction. The scope, timing, and direction are decided by the, or it is what is the strategy decides. So, now you tell me whether strategy will drive you to the plan, or plan will drive you to the strategy. Strategy will be driving you to the strategy, will guide you to the plan. So now which is more in detail? Strategy is more in detail, or audit plan is more in detail? Because those are the questions he is asking. Which will guide you what, and which is more in detail? Now I repeat it. Between strategy and the planning, which will guide you to what? Strategy will guide you to the plan. Now which is more in detail? Strategy is more in detail, or plan is more in detail? Plan is more in detail. Say, to explain it logically, strategy is like, see, when I perform this preliminary engagement activities, give a rough estimate, rough idea of what happens. Because if you are doing the practical audits, these concepts are very easy to understand. Otherwise, you will never understand. These words will remain like words. Now, what are preliminary engagement activities? I'll tell you. Say, I am the auditor of a client. Now, last time, says it's a first audit, initial engagement. My friend called me, is having one friend who is starting a company. He asked me whether you will do the audit of it. Why not? Because I'm in this field, so if I can get couple of lakhs more, why not? So I said yes to it. Now he appointed me in the AGM, and I have accepted it. ADT1 is filed, everything is over. Now I have to start the audit. Now, is it that suddenly I will send 2 people and start the audit? That's not how it happens. So first what I will do, I will go there and I will perform preliminary engagement. I will start understanding who are the owners, what is this requirement, is it a listed entity, unlisted entity, or is he having a parent in US, and what is the accounting system he is following, is he following IFRS or whatever it is. So I discuss with him on all the matters, and that is what the conclusion that I try to get it. And what are the reporting requirements? When should I complete this audit? So I talk to the client and get all these details. By understanding all this, I came to know that I need to complete my audit in 2 months' time. So that is what I'm trying. When I started asking him, do you have foreign transactions and do you have forex transactions and all? Suppose if he says no, ours is a simple dealership business. I buy and sell, retail business. Then the matter is simple. So then I can send anyone. But if he says he's dealing with a lot of forex transactions, then in my team, I should send some senior person who knows FEMA, all this RBI provisions and all. Likewise, the strategy is a broad idea that you get it. And in my, after completing my preliminary engagement activities, after discussing with the client, I came to know that my audit report has to be done and given to him within 2 months' time. Then I start planning. If at all I have to complete that in 2 months, then when I should start, how many people I should send, what they should do. That's where this audit strategy will guide you to the audit plan. Suppose in the strategy, after interacting with the client, if I come to know that it is okay even if I give it in 6 months, then accordingly my planning shuffles. So that is what is this strategy and the plan. So to sum it up, the scope, timing and direction are will be there as a part of my strategy, which is going to help me drive my plan and all. And basically in my strategy, that is what this chart will, because since this is a little complicated topic, theory, how much ever you see, it will, your mind will not be able to retain. So, but he is asking questions. So that's where, when you say strategy, there are three words in it: scope, timing and direction. And what will guide what, that is what this diagram will tell you. Your audit strategy will guide you to the development of audit plan. Then what basically will be discussed in your audit strategy? About resources, that is who will have to be sent, that is the skill level, the qualifieds or articles or BCom guys and all, or how many in number, and when I have to start it, and how to manage, how to supervise. So do I ask manager to go every day and all that? All those points will be there in the this one. Then one lengthy question he is asking, probably since it is a too lengthy, I may not be able to discuss at full length, but he is asking, wherever you are setting up this establishment of strategy, what factors will you consider and all? It's a theoretical direct question. So whenever I am setting the strategy, I will have to first identify the scope, and then I will ascertain the objectives, and then I will see what are my team efforts, how should I direct them. So what are the volume of transactions and all I see. And then I will also consider my previous year engagement activities, what were the previous year observations and how did they change for the current year and all. And then based on all that, I have to ascertain my nature, timing and extent of resources. It's a straight and simple one, but I'll just leave it like this so that you can take diagram and you can read it. It's all self-explanatory, nothing much of it. Now, let me cover the important topics of it. Then what he is asking is, there are, whenever we are talking about it, there is another important question that is being asked is there any relationship between audit strategy and audit plan? So yes, there is a relationship, and which is related, they are closely interrelated. Now and now you tell me, change in what will change in result in what? Can I say change in plan will result in change in strategy, or change in strategy would result in change in plan? Change in strategy would result in consequential changes in the plan. So this question is asking, is there any relationship between strategy and the plan? Yes, they are interrelated, and the change in audit strategy, so wherever you have this content, mark it as a category. He is asking questions on that. Then whose responsibility? I will ask the basic question. Whose responsibility it is to prepare the audit plan and all? Audit plan or audit strategy, is it the management's or the auditor's responsibility? It is the auditor's responsibility to do that. Then there is one more question. I just want to go to it. Just give me a second. This topic, audit program, whatever you are seeing, just go there and mark a category to it. He is asking regularly this. So just take it as a A1. He is asking 5 marks questions. Simple one-liner. That is, can I prepare one audit program which is suitable for all businesses? So that is what it is. So however you sensitize yourself, sensitize, because he is asking for 5 marks questions out of this one small statement. So evolving one audit program, is it practical? Can I make one program which will be suitable for all businesses? The answer is no. It is not practicable to keep one program for all businesses. Why? Because the businesses are different. So they change in the nature, they change in the size, and they change in the composition. And the effectiveness of operations and internal controls are also different. So therefore, having one audit program which is practical for all business units is not possible. So this question he is asking regularly. Then one more question he is asking is whether this audit plan or audit strategy, because you are audit professional, do you have to change, or is it that once you are prepared, you must follow all the time? So, because you are a professional, you are not supposed to change your own sentences. What should I do? Should I change this plan and strategy, or should I continue with that? So, on that, this audit plan or audit strategy should be a dynamic one. So it shouldn't be constant. As the audit progresses, this plan and program and the strategies also must be changed. So you shouldn't have a rigid audit plan. That is what is this additional point of it. Then one more he is asking is this assistant to keep, because he is asking nowadays this latest questions and all that. He is asking whether like the background of it is the assistant must, we should encourage the assistant to keep an open mind. So what he is trying to say is, say you take my office, I am the partner, now I am a chartered accountant. Now what to do, I have decided. Now the question is, what should be my attitude? Should I expect my articles to just follow what I am saying, or should I encourage them to apply their own mind? Now, but the risk here is, see, when I allow you to apply your own mind, are you knowledgeable enough to apply your own mind? Do you know everything? Can you think of all angles? You may not know Forex, you may not know RBI, you may not know STPI, so you may not be able to think. That's why most of the practitioners will say that, with the assumption that you don't know much. So they say that, no, you must do what I say. So that attitude. That is why this is saying that shouldn't be the attitude. Wherever possible, the assistants, you prepare a program, but you are sitting in the office and preparing the program. But who is executing it is your articles, your team is executing it. So they know the ground realities. So give them a free hand. That is what is the essence of it. So the assistants must be given a free hand to do it. They must be given an open mind. So open mind, that is, I told you to take up 10% of samples. But say you are my article, I send you to a client. Sitting here in the office, I thought 10% or samples are sufficient. Now we have gone to the client. But somehow on looking at the stores and all that, it's not very organized. You felt that doing 10% is not sufficient. It is better to do cover 50%. So then you must be given that authority to decide it. That's why they are saying wherever edits are required, you should be allowed. Or if some activity is irrelevant, avoid it, not required. So the assistants must be given that free hand to decide. Indirectly, my program or my audit plan, what I am preparing, it shouldn't be rigid one. So it should be a flexible one. That is what he is saying. And then this additional point, that is what he is also saying, periodic review. So though you are preparing it, you must continue to have a relook at it, continue to have a periodic review to see whether any inadequacies are there or redundancies are there. You can keep modifying. So, and the old traditional question was, this is the old one. So earlier it was important, but of late he is not asking it. But if you see the old scanner questions and all, you will see this being multiple times repeated. Whenever I am preparing a program, what are the matters I should keep in mind? So whenever I am preparing an audit program, I should keep these points in mind. It's a straight and simple question. So stay within the scope, because as an auditor, our task is limited to financial statements. We don't get into operational qualities or efficiencies. Therefore, whatever I am verifying, I must always stay within the scope of it. And then prepare a written audit program. So it shouldn't be oral. Prepare a written audit program, which will be helpful. And then determine the evidence that is reasonably available. What kind of evidence you can gather? So based on each activity. And apply only those steps which are really useful for the audit of it. So whichever are not relevant for the purpose of audit, because you are not concerned about the areas beyond your scope. So therefore, focus only on what is relevant for your role and include the audit objectives for each area. Though broader objectives are to form an opinion and to issue an audit report, but here form an objective like share capital. See that the compliance of the Companies Act is complied, and cash verification. Now see that the cash balance is in agreement with the financial statement. Likewise, tell or physical verification. The physical stock is available and in agreement with the recorded stock. Likewise, give a clarity, give the objectives for area wise. Then the team will have more clarity, and consider all possibilities of error. Whenever you are preparing this audit program, the checklist. So make sure that you have included all probabilities of where it can go wrong, and coordinate the procedures. Wherever multiple teams are working, see that it is. It is a lengthy one, point based, but is asking. It is a simple 4 marks or 5 marks, nothing this one. And then advantages and disadvantages of audit, of this audit program and all, you can easily, it is also very old descriptive question. Nowadays he is not asking much onto it. So with this, we will stop this session for today. These small classes are all right, the small chapters, but when we meet tomorrow, we will touch upon the core concepts, like where you have full of standards and the important topics like audit of banks, which he is asking for 10-15 marks, that we will cover. And we will cover audit report, where you cover all 700 series, and plus CARO, mandatory 5 marks will come for CARO, we will cover. And chapter 4, audit evidences, so where you have all this sampling and all of it. And then finally we will discuss on our strategy and methodology on how do we answer this questions from chapter 5, that is audit of financial statements. So the core concept today is broadly like easy to read and easy to score and easy to finish topics. And the only chapter with standards we covered is completion, this chapter 7. So except that these are all the simple chapters, but still I would recommend you to start this fast, because they are very simple. The scope for the in-depth questions and all is limited. You can easily score marks. So when we meet tomorrow, we will attack the tougher ones, completely the standard based chapters, and then we will see how much ever we can cover it up. We will do our best to cover it up. So with this, I am ending this session. We will meet tomorrow to have a detailed discussion on the remaining topics. Thank you all.